and investor services to position your asset management business for success. Come grow with us.
With SEI Investment Manager Services, you lead the charge in a competitive marketplace. Learn more at SEIC.com/seize change.
Business is constantly evolving.
Did you know that players of People's Postcode Lottery have raised over £500 million for charities and good causes? They've also won £47 million in prizes so far this year. And it could be your postcode next. Visit postcodelottery.co.uk/radio before midnight on the 23rd of April to play in the May draws. PPL managed lotteries on behalf of good causes. 16 plus, conditions apply, play responsibly.
Okay, people, I've got the daily checklist. Who today has eaten dinner for breakfast? Tick. Started a chore you'll never finish? Tick. Done a conference call in your pajamas? Tick. Here's another for your list. BritBox. Streaming the BBC, ITV, Channel 5 and now Channel 4. All in one place and ad-free. So add BritBox to your list and get a 30-day free trial of the biggest box of British box sets. Search BritBox free trial. Tick. Biggest compared to other SVOD providers. Auto renews at $5.99 a month unless cancelled. T's and C's apply.
Because you can't watch Trolls World Tour at the cinema, Sky Store is bringing the cinema home to you with Sky Store Premiere.
I'm going to destroy all music, except for rock!
We need to unite the trolls to save all music.
Our brand new service that lets you watch movies at home that would normally be in the cinema.
Rock and roll!
Let's go save the world!
Yeah! Prepare for battle.
This ought to be good.
Enjoy Trolls World Tour now on Sky Store Premiere, bringing the cinema to you.
Get your MLB fix with these great podcasts on TuneIn. Fill your seventh inning stretch with the Ringer MLB Show.
I just can't get over it. It's like, oh, well, Jeter Downs. Didn't realize he was a top. Like, my dad is drinking the Kool-Aid on this. He's like, of course. Mookie was going to leave. I'm like, what do you mean? You don't know that.
Slide into second with the Starting Nine podcast.
Nolan Arenado slides right into the top spot for a favorite baseball player. Active in the league right now. It is a pleasure to be sitting next to you, sir.
Thank you, man. I appreciate it. Thank you.
This is we've been waiting a long time for this. We actually, in terms of like active
round the bases with the Statcast podcast.
Ways of going about it. I picked third, so in some ways it made it easier for me. Mike, just to go over the first couple of picks. Mike took Barry Bonds, who I think was kind of the obvious guy to take number one. Not only.
Catch these and more MLB podcasts right here on TuneIn.
Introducing a new podcast, ESPN Daily, hosted by me, Mina Kimes. When you want to go beyond your feed, when you want to get inside the score, when you want to get behind the highlight, there's ESPN Daily. Go deeper into the stories of the moment. Get the exclusive access and insider perspective that only ESPN can give you. The best sports story all day, 20 minutes a day, 5 days a week. ESPN Daily.
Search ESPN Daily to listen.
Bloomberg Interactive Broker Studio in New York. Bloomberg 1130 to Washington, D.C. Bloomberg 99.1 to Boston. Bloomberg 106.1 to San Francisco. Bloomberg 960 to the country. Sirius XM Channel 119 and around the globe. The Bloomberg Business app and BloombergRadio.com. This is Bloomberg Daybreak.
It's 6:30 on Wall Street. Good morning. I'm Nathan Hager.
And I'm Karen Moscow. We're just about 3 hours away from the opening of U.S. trading. Let's get you up to date on the news you need to know at this hour. U.S. futures are gaining as President Trump ramps up plans to get America back to work. As U.S. COVID-19 infections hit 640,000, we may be past the peak, that according to the White House.
The battle continues, but the data suggests that nationwide we have passed the peak on new cases. Hopefully that will continue, and we will continue to make great progress.
And that has President Trump preparing guidelines for relaxing stay-at-home rules. Details are expected today.
Sometime during the afternoon, we're going to be announcing guidelines, and we'll be talking about various states, and it's very exciting.
The president's getting advice on restarting the economy from corporate leaders, holding conference calls with more than 200 executives. Sources say he told CEOs they might need social distancing measures in the workplace and have employees wear masks. We spoke with U.S. Chamber of Commerce President Suzanne Clark, who's advising the White House.
We're looking at new processes, that CEOs will have new restrictions, that there'll be new requirements, and even new risks. So every CEO is asking those questions.
A person briefed on the call said CEOs told President Trump he needs robust testing in place before sending Americans back to work.
We'll get more on the economic toll from the outbreak today. With weekly data on unemployment claims, economists predict 5.5 million Americans filed for benefits last week. If that number holds, the April unemployment rate could hit 15%.
As the pandemic weighs on Main Street, Wall Street looks to quantify the impact with another round of earnings. BlackRock is out with results that were flat in the first quarter. Revenue came in above estimates, while the firm saw long-term outflows of $19 billion.
And about 30 minutes from now, we get earnings from Morgan Stanley. Bloomberg's John Tucker is here live with the preview. John?
And Nate, Morgan Stanley's revenue expected to decline 6%. Earnings may be 15% lower than last year. The focus is going to be on the firm's asset management division. It's been generating more revenue recently. And so far, banks reporting this week had their best trading quarter in 8 years. Well, after those results, we're going to speak with Morgan Stanley CEO James Gorman. Tune in for that interview, 10 a.m. Wall Street time on Bloomberg Radio and Television. In New York, I'm John Tucker, Bloomberg Daybreak.
All right, John Tucker, thank you. S&P futures are higher, up about 19 points. Dow futures up 123. NASDAQ futures up 82. The DAX in Germany is up 1.1%. The 10-year Treasury, little change, yield 0.62%. And the yield on the 2-year, 0.20%. The 30-year yield, 1.25%. And straight ahead, we have the latest world and national news. And this is Bloomberg.
Karen, thank you. 6:33 on Wall Street, and Michael Barr is back with more on what's going on around the world. Good morning, Michael.
Good morning, Nathan. President Donald Trump threatened to try to force both houses of Congress to adjourn. It's an unprecedented move that would likely raise a constitutional challenge. During an adjournment, presidents can make temporary appointments without Senate approval, but presidents cannot make recess appointments when the Senate adjourns for only a few days. New York Governor Andrew Cuomo says there are some signs that his state is seeing signs that social distancing is working in the battle against COVID-19. In his daily briefing, Cuomo says hospitalization rates and new ICU admissions are showing downward trends. Cuomo says it is promising, but says New Yorkers shouldn't ignore social distancing mandates.
We're still in the woods. The good news is we showed that we can change the curve. Good news is, great news in my opinion, we can control the spread. That is great news. Because can you imagine if we couldn't control the spread? If we did all this and the spread kept going up?
Cuomo signed an executive order requiring face covering statewide for people who are going outside. Meanwhile, a nonprofit is taking the medicine on the road to treat the most vulnerable people in the city, the homeless. Dr. Amy Edelstein is a clinical director for the Project Renewal Medical Van.
In particular, in the homeless shelters where we can't always social distance everybody, we really need masks for those in the shelters so that we can try to protect each other and protect the homeless people who really need a place to stay from infecting each other themselves.
Air travel at New York City's airports almost disappeared in March while traffic on the Port Authority of New York and New Jersey's bridges and tunnels plummeted after COVID-19 pandemic prompted travel restrictions. Average weekday air passengers dropped by 96% for the week of March 30th to April 3rd compared to the weekday average in March of 2019. The Food and Drug Administration modified its stance on COVID-19 and vaping, saying it has an unknown effect on the risk of the coronavirus while warning that smoking can create worse outcomes. The agency told Bloomberg e-cigarette use can expose the lungs to toxic chemicals, but whether those exposures increase the risk of COVID-19 is not known. Global news 24 hours a day on air and on Quick Take by Bloomberg, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Michael Barr. This is Bloomberg, Nathan.
All right, Michael, thank you. Coming up to 6:36 on Wall Street, time for the Bloomberg Sports Update. Here's John Stashower.
All right, Nathan, Dr. Anthony Fauci has, of course, been answering coronavirus-related questions for weeks. In a Snapchat interview, he was asked about sports coming back. He's in favor of it, but said there should be no fans and the players must be surveilled, tested off. And if college football wants to play with fans, might have to wait until 2021. There have been rumors of college football playing from February to May and thus having basically 2 seasons in 1 year. NFL draft next week, first round week from tonight. The Giants have the 4th pick. Their rookie head coach is Joe Judge.
I think that when you're looking at players in the draft, first off, you're always looking for the best player available.
And to me, that means long-term upside. If you think you're taking someone who's so on pro-ready, what all these rookies find out the second they step in the building is none of them are pro-ready. That's why they need the spring program. That's why they need training camp. That's why they go through growing pains as rookies.
Jets have the 11th pick, the Bengals the first. They're expected to take LSU quarterback Joe Burrow. NFL Hall of Famer Willie Davis died at 85. Began his career in Cleveland. Typical Browns, they traded him to Green Bay, got a receiver who had one catch for them. Davis with the Packers never missed a game in 10 years, 5-time All-Pro defensive lineman. Nice gesture by Curtis Granderson, the ex-Met, ex-Yankee, donated 42,000 meals to the coronavirus-related food bank. 42 because he did it on Jackie Robinson Day. April 16th, this date in sports history, 1940 in Chicago. Cleveland, Hall of Famer Bob Feller with what is 80 years later still the only opening day no-hitter. Feller would win 26 more games that season. John Stanshauer, Bloomberg Sports. Nathan?
All right, John, thanks. It's 6:37 on Wall Street.
The following commentary is from Bloomberg Opinion.
When branding fails. I'm Jonathan Bernstein, a columnist for Bloomberg Opinion. Stimulus checks are apparently going to be delayed a few days, so Donald Trump's name can be added. Similar checks sent out during other administrations did not have the president's name on them. Come on. The plus side for Trump from this is virtually nothing. He's the president. No one needs to see his name to make the association. The effects of the policy matter, not credit claiming. The downside? If it's true that the checks are being delayed as a result of this ploy, then there could be a real, albeit small, negative economic effect. There's also an obvious public relations problem. Trump looks vain, self-serving, and indifferent to the interests of voters. He's also causing trouble for himself within the government, with bureaucrats upset with Trump's politicization of the process. There's nothing wrong with a politician attempting to publicize his or her accomplishments, but Trump has gone about this all wrong. No wonder he has been the overall least popular president of the polling era. I'm Jonathan Bernstein. For more opinion, please go to Bloomberg.com/opinion or OPIN Go on the Bloomberg terminal.
This has been Bloomberg Opinion.
And you can hear Bloomberg Opinion commentaries every weekday at this time. Terminal customers can read more at OPIN Go. It's just before 6:39 on Wall Street. Time for the Bloomberg Green Report. Here's Bob Moon.
The European Union's so-called Green Deal program to slash fossil fuel pollution will be part of the cure for the economic slump brought on by the coronavirus pandemic.
The European Green Deal is exactly the right answer also to the corona crisis.
At a news conference in Brussels, European Commission President Ursula von der Leyen stood firmly behind the far-reaching package of environmental measures to slash emissions to zero by 2050. It was launched just before the coronavirus outbreak, which is now pushing the region into a recession. As the European Commission drafts plans for an economic recovery package, von der Leyen suggests the shift to renewable energy sources is the way to put Europe back to work.
The political necessity is as strong as it was before the crisis. Climate change and global warming did not stop. They will keep on going.
There's growing pressure from companies and non-governmental organizations to stand by the sustainability principles. That's the Bloomberg Green Business Report. I'm Bob Moon.
All right, Bob, thanks. Meantime, the head of the world's top miner is bullish on gold. Newmont CEO Tom Palmer tells Bloomberg gold could top $2,000 an ounce. He expects the metal to remain elevated over the next 5 years as the global economy contends with coronavirus. United Airlines is warning employees of long-term job cuts. The airline says travel demand is essentially zero, and it sees no sign of improvement in the near term. United plans to further cut flights to roughly 10% the capacity planned for this year. Finally, the parent company of Google will slow hiring for the rest of the year. It is the most drastic action Alphabet has taken yet in the coronavirus crisis. The fallout from the outbreak has battered Alphabet's ad business. Futures moving higher. S&P futures up 17 points now. Dow futures ahead by 119 points. NASDAQ futures a gain of 80 points. 10 years down, 132nd, yield 0.63%. And you're listening to Bloomberg Daybreak.
Message and data rates may apply. T&C and privacy terms can be found at babbel.com/terms. Please don't text and drive.
Have you wanted to speak a new language, but you thought it'd be too hard or take too much time? Then try Babbel for free by texting EXPLORE to 64,000. In just 15 minutes a day, you'll be on your way to speaking a new language in just a few weeks. And right now, you can try Babbel for free. Babbel starts out teaching you words and phrases by matching them with pictures. You won't believe how easy the interactive program is. Soon the sentences get a little bigger, and before you know it, you're having simulated conversations voiced by native speakers. And because Babbel is crafted by language experts and uses the spaced spaced repetition method, in just 10 to 15 minutes a day, you'll be speaking the language of your choice with real confidence. With Babbel, you can speak a language. Just text EXPLORE to 64,000 and start your first lesson in the language of your choice for free. Download the Babbel app or text EXPLORE to 64,000 and try it for free. Text EXPLORE to 64,000.
Hey y'all, Jeff Foxworthy here. Now, if you've ever found yourself repeating the same thing over and over for 75 years, you might be Smokey Bear.
Only you can prevent wildfires.
That's why I'm filling in for Smokey to switch things up, because there's a lot more to say. And I should know because my grandfather was a firefighter. And one of the things he taught me is that the people that love the outdoors the most are often the ones accidentally starting wildfires, which means always BYOB. No, bring your own bucket to the campfire. And be extra careful with things like burning yard trimmings. Don't just walk away, or chances are you might be starting a wildfire. So for the love of the outdoors, go to SmokeyBear.com to learn more about wildfire prevention. Brought to you by the U.S. Forest Service, your state forester, and the Ad Council.
This is the Bloomberg Pursuits. When we're stuck indoors all day, we might find our energy bills creeping up uninvited. The cheeky rascals. And none of us need that right now. But by simply switching your energy with Money Supermarket, you could save £280 on your bills. It's just one small step towards money calm. Money Supermarket.
Because you can't watch Trolls World Tour at the cinema, Sky Store is bringing the cinema home to you with Sky Store Premiere.
I'm going to destroy all music, except for rock!
We need to unite the trolls to save all music.
Our brand new service that lets you watch movies at home that would normally be in the cinema.
Rock and roll! Let's go save the world! Yes!
Prepare for battle! This ought to be good. Enjoy Trolls World Tour now on Sky Store Premiere, bringing the cinema to you.
To help make the most of your time at home, TuneIn is sharing our top activities for social distancing. Tip number 5, cooking something. We all get stuck in a culinary rut with our normal routine. Shake things up in the kitchen by trying an ambitious new recipe or an over-the-top dessert. If cooking really isn't your thing, you can always support your local restaurants by ordering out. For more indoor inspiration, search Listen from Home on TuneIn.
Looking to freshen up your listening on TuneIn? Head to the homepage to discover something new. There you'll see custom recommendations based on your listening habits, along with new episodes of shows you've enjoyed in the past. Uncover your next audio obsession on the homepage.
The 2020 NFL Draft is on TuneIn.
Starting Thursday, April 23rd, ESPN Radio has you covered with live coverage, discussions, and analysis of every round.
He hasn't made his last move at the position. He has another.
Be there when the future stars of the NFL find their home.
This kid's a competitor if you're looking at the plus side of him.
And when your team selects the players that will shape their future for seasons to come.
Don't miss the biggest event of the offseason, live on TuneIn.
To a network of news and financial information 24 hours a day. Powered by more than 2,700 journalists and analysts in more than 120 countries. This is Bloomberg Radio. Now, a global news update.
Special report, coronavirus update. New guidelines expected soon from President Trump aim to ease restrictions in areas with low transmission of coronavirus. Current social distancing guidelines would remain in place for harder hit states. Talks in Washington are accelerating on a $250 billion emergency stopgap coronavirus relief bill aimed at helping small businesses. A new report from the Associated Press indicates that Chinese government officials knew they were facing a pandemic 6 days before warning the public.
The internal documents acquired by the Associated Press suggest that China's top officials knew the potential severity of the virus, but for 6 days held off on sounding the alarm to the public. The AP report is based on what they characterize as a leaked memo from a confidential teleconference involving the head of China's National Health Commission.
There's correspondent David Culver from Shanghai. I'm John Trout.
Tom Keene and Jonathan Farrell.
Is that good for American finance? What is happening with the headcount?
Right, where it counts. Bloomberg Surveillance, weekday mornings at 7 Eastern on Bloomberg Radio. Bloomberg, the world is listening. Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and on Quick Take by Bloomberg. This is a Bloomberg Business Flash.
And I'm Karen Moscow. BlackRock saw net outflows from its long-term investment products for the first time in 5 years as panicked investors fled the first quarter's market turmoil. Institutional investors withdrew about $31 billion from offerings, including mutual funds and exchange-traded funds. Total net outflows from such long-term investment products was $19 billion in the quarter. Sources tell Bloomberg Apple developing over-ear wireless headphones with parts that can be swapped in and out. Futures this morning are higher. S&P futures are up about 15 points. Dow futures up 95. NASDAQ futures up 73. The DAX in Germany's up 1%. 10-year Treasury little change, yield 0.63%. And the yield on the 2-year 0.20%. NYMEX crude oil up 1.9% or 37 cents at $20.24 a barrel. And COMEX gold is up 1%, up $17.50 at $17.5770 an ounce. The euro 1.0873 against the dollar. The yen 107.66. That's a Bloomberg Business Flash. Now here's Michael Barr with more on what's going on around the world. Michael.
Karen, President Trump said he will unveil guidelines to relax stay-at-home rules today, citing signs that the coronavirus outbreak is plateauing in parts of the country. Trump has been eager to ease social distancing measures that have caused businesses nationwide to shutter, costing more than 16 million Americans their jobs in the past month. Iranian ships repeatedly harassed and approached American vessels conducting operations in the Persian Gulf before disengaging after multiple warnings. That's according to the U.S. Central Command, who says 11 ships with Iran's Islamic Revolutionary Guard Corps repeatedly crossed the bows and sterns of the American vessels at extremely close range and high speed yesterday. Bangladesh's Coast Guard has rescued 382 starving Rohingya refugees who had been drifting at sea for weeks after failing to reach Malaysia. Global news 24 hours a day, on air and on Quick Take by Bloomberg, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Michael Barr. This is Bloomberg, Nathan.
All right, Michael, thanks. We are live from the Bloomberg Interactive Broker Studios. We're at 6:49 on Wall Street. And now time to check what's going on in D.C. Some of the top stories in the nation's capital include business leaders urging ramped-up testing for the coronavirus as President Trump picks their brains on reopening the economy. Congressional leaders delaying picking members of the oversight panel for the $2.2 trillion stimulus, and the president threatening to force Congress to adjourn so he can appoint nominees without Senate approval. Also making news, new guidelines expected today from President Trump on easing social distancing, with signs he says the coronavirus is peaking in some parts of the country. For more on all this, we're joined by Wendy Schiller, once again, chair of the Political Science Department at Brown University. Of course, we've talked many times before, Wendy, about the president's keenness to get the economy back up and running sooner rather than later. So what are you going to be looking for from the guidelines the president says he will roll out later this afternoon?
Well, I mean, first of all, I'm going to look for the rhetoric, right? So the president has veered, over the last 2 weeks between sort of executive power, total executive authority, and sort of reassuring the American public that he's the point person, that they're leading the effort, and blaming the governors or ascribing responsibility to the governors for the conditions of COVID and the response in their own states. But they're all in it together for the economy. I mean, we are a national and international economy. You really can't have some states open up more than other states, at least regionally, which is why you saw governors from the coast, getting together and trying to figure this out, because you'll just have more outbreaks. And so that's the problem. You need a coordinated effort. And right now, the conditions are obviously incredibly, unprecedentedly stressful, but they're not particularly good between the governors and the president. He's got to fix that if he's going to be successful in trying to get the economy open.
How do you see him going about fixing that, given the friction, to put it mildly, I think, that we've seen between the president and many governors on both sides of the aisle?
it's almost not possible to ask for someone who seems to not be able to stay on the same page in terms of tone and consistency. And this is what we really need from the president right now, just a consistent approach. But, one day he looks really amenable to working with them and really cooperative, and he's flattering. And then the next day he's going after one or two or three governors. So, obviously, human nature is such that nobody can live in this kind of quarantine forever. And you can't really justify killing the entire American economy, over some states that have a much bigger outbreak than others. It's really a difficult thing. And I think they're all sort of trying to figure out their best solution at the time. But the problem is we need overall coordination in a federal system. It would be a challenge for anybody.
I got to ask you about this latest assertion from the president of executive authority, saying he could use his constitutional power to force Congress to adjourn so he can make appointments, I guess ostensibly through recess appointments. What is he playing at here?
Well, it's a typical, Trump sort of theme, right, particularly to his base. He did this in his nominating convention acceptance speech. I can fix everything. I have total power. He's been grasping at this for a very long time. It's the way he portrays himself. He's going into an election, and he's betting that if things get better, he can claim credit for getting everything off the ground again. And this is part of his scheme. I'm not sure even the Senate, even under Mitch McConnell, that these Republican senators are going to say, yes, we want to give the president a seat, that kind of authority to the president. And it's a gamble, because if you look too dictatorial, those independent and suburban voters who are experiencing job losses like everybody else may look at this and say, we just don't want 4 more years of this. It's too dangerous. We want the sort of very mild, very experienced Joe Biden, because he's probably not going to do something like this. So it's A, will it be effective in any way, and will anybody notice? And B, does it sort of lend itself to, increasing the nervousness for the very group of voters that Trump absolutely needs to hold on to win in November?
Yeah, I was going to ask you whether that could provide an opening for Joe Biden as he tries to raise his profile through this pandemic. All he's been able to do at this point is hold virtual town halls.
Right. This is, this really does remind me of 2016 when Trump just captured the airwaves for almost the entire spring, even well before he was the nominee. And, he is the president of the United States. You have to cover his press conferences. That's just life. But Joe Biden's team has got to find a way to get him out front and center and get him on the airwaves or the digital space, all of it now. And this sort of hiding in Delaware, just to be, not to be mean about it, but it's just totally ineffective and gives Trump the same advantage they had in 2016, which is enormous free press with no counter argument. So people may think there's an imaginary Joe Biden they could vote for in November, but if he doesn't have a plan and he's not out there looking like a leader now, I think that just gives Trump the advantage.
Thanks, Wendy. Always good talking to you. That's Wendy Schiller, chair of the Political Science Department at Brown University. Karen?
All right, Nathan, thank you. It is 6:54 on Wall Street. It's time now for the Bloomberg Small Business Report with John Tucker. Good morning, John.
Hey, good morning, Karen. We're looking at how small business is faring in the face of the coronavirus pandemic. Today, we speak with Kim Strasner, who owns a company called Words with Boards. They're based out of Baltimore and specialize in personalized cutting boards. Kim, tell us how stay-at-home orders in Maryland have impacted sales. Also, how you pivoted in this tough time for business.
Sales are definitely down because our personalized cutting boards and other, wooden gifts are given mostly at weddings and showers and anniversaries and, so events are canceled. And so what we did is we pivoted. We joined up with 2 other local Baltimore companies, a master seamstress, Jill Andrews, and Dan Jansen with Imperium Shaving, and we are making cotton masks. So we're using our laser engraver to cut the fabric. Jill Andrews, she designed the pattern, which we're using 100% organic cotton so that there's no pesticides or chemicals that you're breathing in when you're wearing the masks. And that business is doing really well, as you can expect.
Now, who are the customers for that? Healthcare industry or just the general public?
Mostly the general public, city and state orders as well, U.S. Postal Service, local city contracts, but also mostly just the general public.
What is the difference in revenue from the traditional business to what you pivoted to now? Is that enough to sustain the business?
My husband lost his job, so we definitely as a household, our income is down. And, we're trying to pay our employees a fair price and sell the masks for a fair price. We're not going to get rich off of this. It's just we saw a need. It's not something, we're going to get rich off of.
All right, Kim. Kim Strasner, owner of Baltimore-based Words with Boards, pivoting now to make masks. That new business can be found at qualitymask.com. Kim, we appreciate your time this morning. And as small business struggles in the face of the coronavirus pandemic, we're going to keep bringing you stories like this every day at this time, right here on Bloomberg Daybreak. I'm John Tucker. That is your Bloomberg Small Business Report for today. Karen.
All right, John, thank you. We are watching out for earnings from Morgan Stanley this morning, and we'll bring those to you just as soon as they cross the Bloomberg. BlackRock said that it saw net outflows from its long-term investment products for the first time in 5 years as panicked investors fled the first quarter's market turmoil. Institutional investors withdrawing about $31 billion from offerings, including mutual funds and exchange-traded funds. Total net outflows from such long-term investment products was $19 billion in the quarter. We are watching futures this morning. They are higher. S&P futures up about 15 points. Dow futures are up 94. NASDAQ futures up about 77. 10-year Treasury down 132nd. Yield 0.63%, and the yield on the 2-year 0.20%. NYMEX crude oil is up 1.7% at $20.21 a barrel. The euro 1.0880 against the dollar. Bloomberg Surveillance is straight ahead with Tom Keene, Jonathan Farrow, and Lisa Abramowitz. And stay tuned. Bloomberg Radio, 10 a.m. Wall Street time, an interview with Morgan Stanley CEO James Gorman. For Nathan Hager, I'm Karen Moscow, and this is Bloomberg.
Influential.
Where will 2020 take you? Somewhere where people care about each other, about our planet, about creating a better world for everyone, and becoming the best versions of yourselves. Join a community of like-minded individuals at the University of Winchester. Make sure to accept your offer by the UCAS deadline and visit our website to find out more. See the bigger picture. Be the difference. Go to winchester.ac.uk.
At Asda, we're doing all that we can to keep shelves full and prices low. So you can pick up a 7-pack of Grower Selection bananas or 400 grams of seedless red grapes, both just £1 each. Asda. Save money, live better. Selected stores subject to availability.
This is a message from the government. Coronavirus is a national emergency, life-threatening for people of all ages everywhere in the UK. To help save lives, you must stay home. Only go outside for food, health reasons, daily exercise, or to work, but only if you cannot work from home. Stay home. Anyone can get it, and anyone can spread it. Stay home to help protect the NHS and frontline staff working to save lives. Coronavirus. Stay home, protect the NHS, save lives.
Well, given the data, which segments of Alphabet's business are most likely to come under scrutiny?
Get all the pieces.
They're getting mixed signals from governments.
He's failed to gain traction.
Bloomberg Radio, the Bloomberg Business, Radio.com, and iHeartRadio apps, and BloombergRadio.com. Bloomberg, the world is listening. From the financial capital of the world, 24 hours a day at Bloomberg.com, on the Bloomberg Business app, and on Quick Take by Bloomberg. This is Bloomberg Radio. This is Bloomberg Surveillance Economics.
We are being taken out of our comfort zone by the coronavirus.
Dollar weakness is pretty much a good thing for a lot of the rest of the world.
Finance.
We are going to see a global demand contraction this year, most likely, for oil. The financial health of the business sector has deteriorated somewhat.
Investment.
Obviously, the value in high-vol stocks are going to continue to suffer.
It looks as though the bond market is talking itself into a recession here.
Bloomberg Surveillance with Tom Keene, Jonathan Farrow, and Lisa Abramowitz on Bloomberg Radio.
From New York City, for our audience worldwide, good morning. Good morning. This is Bloomberg Surveillance. Coming up on the program, Morgan Stanley wrapping up Wall Street results. President Trump preparing to unveil new virus guidelines as America braces for millions more jobless claims. From the Bloomberg Interactive Brokers Studio, hello Thursday. Here is your Thursday morning price action. On the week, equities just mildly lower on the session with positive 14 points on the S&P 500, up around about 0.5%. 1%. In the bond market, not much price action to speak of. Treasuries unchanged. Yields go nowhere on a 10-year. 0.63% is your yield. A quick snapshot of G10 in foreign exchange. The dollar more broadly stronger against the euro. The situation as follows. Euro dollar coming in 1/3 of 1%. And to round things out, cross asset, your commodity market set up as follows this Thursday. Commodities come in up by 1.36% on WTI to $20.14. From New York, alongside Tom Keene, I'm Jonathan Ferro, together with Lisa Abramovich. You are listening to Bloomberg Surveillance live on Bloomberg Radio. In 90 minutes' time, Tom Keene, the global economy, the world of economists will pause once again for an ugly number for the labor market in America.
We can talk through the show, John, about the cross currents right now, but you're right, and this happens, folks, in eras. I remember M1, M2, M3 years ago. Actually, John, Larry Kudlow and I used to kid about that, how the world would stop. Well, you know what? This is the new statistic where we stop. It has incredible import and signal. There's lots of people to talk to about this. I know we've got Stephen Whiting here in moments. But, John, all in all, it's become a grim number, and you wonder week to week, there's a point where it ends. Where is that point?
I don't think anyone thinks that point is this morning. Lisa, the median estimate 5.5 million. The range are very wide again. The low estimate 2 million. The high 8. Anywhere in between is just one more ugly print.
It's heartbreaking. I mean, 1 in 10 Americans, nearly 1 in 10 Americans has lost their jobs in the past 3 weeks. And this will bring, the expected print today will bring the total number of job losses to exceed 22 million jobs lost in the past month. That is all of the job gains in the past decade wiped out in 4 weeks. And the question is, are these wiped out permanently? How many will come back? And how resilient were some of the balance sheets of these households heading into this, John?
It's a conversation we'll be having through the morning. The number comes at 8:30 Eastern. Look out for that. In about 15 minutes' time, we'll have Morgan Stanley earnings, and we will have an interview with Mr. Gorman himself on Bloomberg Radio and on Bloomberg TV at 10 Eastern. Look out for that a little bit later. In the here and now, I'm really pleased to say, as Tom points out, we have Steve Whiting with us, Citi Private Bank Global Chief Investment Strategist. Steve, as you've pointed out, much quicker to demolish than rebuild. Speak about that with regards to the labor market in America.
Well, as you've seen with unemployment insurance claims up 17 million over 3 weeks, I mean, that's given us a real-time rise in the unemployment rate through last week from about 3% to about 13%. So we've never seen anything move that fast. But, I mean, it just goes to the very nature of the shock, shutting down economies. This is not something that naturally happens because, we overbuilt industry or we had some excesses in the economy. This is an artificial shock. It's shut everything down. I do think, again, that by doing that, when you have poorly capitalized small firms, or you have businesses that essentially live week to week with their customers and survive that way, that the rebound process for them has to be very hard. And that's why, again, all of the efforts that it's taken for governments to try to, bridge this period to ensure this loss as best they can, that this can limit the extent of the deterioration and the timing that it takes to get a good portion of this back.
Steve, when you did pure economics, you looked at profits like nobody I know. Let's bring it right over to strategy and profits right now with a dumb question in the morning. It's grim out there. Why is the stock market going up?
So it really should be looking at where profits are 6 months from now. And so, why did we have the fastest correction in history in the month of February? Well, markets didn't believe that the coronavirus would take down the world economy, that we wouldn't all be locked down like Hubei province. So tremendous shock. I think we can argue about, the depths of how far down it has to go. For example, in the second quarter of the year, we're expecting S&P 500 EPS to fall more than 60% on a year-over-year quarterly basis. But from there, it will go up some. And it takes a long time, again, to go all the way back up. It may take us till 2023, to have a higher level of EPS than 2019. But we are going to be in an up direction when we stop these shutdowns. That's our basic view here. Now, when you take a look at which industries, again, have fallen, take a look at the healthcare sector. There's not going to be an EPS problem. It's not going to be a revenue problem, right? Some of the shares are down, but they're down much, much less. Then you think about some of the loss-making companies of the world. Well, their market caps are limited to a downside of 0. And many of them will actually survive. That's why they still have market cap, but they can have losses, right? So the profit collapse, can be a lot larger, again, than the decline in market cap, which is really, again, the future of all future profits.
So, Steve, there seems to be resilience among companies, and certainly the biggest and best capitalized heading into this. I want to talk about individuals and households because we're talking about job losses that are unseen and have not been seen since the Great Depression and maybe could exceed that. And I'm looking right now at a Federal Reserve study that shows that that a significant proportion of average Americans could not cover 3 months of expenses with savings by selling assets, by borrowing, or with help from family and friends. How resilient were American households heading into this? Were they less resilient than perhaps people think?
I think, again, it's a distribution in the economy at large. And this is why, again, there are efforts, again, to help those people with checks, with not just unemployment insurance, but, again, transfer payments, directly to households. And we don't believe that they have to end with a single payment, of $1,200 once. Again, the total fiscal cost for this, the total spending that may ultimately be necessary, we've calculated as much as $4.5 trillion, right, which is larger than the current package. But again, that's a very small price to pay for limiting the duration and the negative side effects, of periods of very, very long entrenched decline. That's the difference between the Great Depression and the financial crisis of 08-09. And I think, when you look at this from the perspective, whatever arguments you want to make about this, policymakers have moved fast. What it took the Fed 14 months to do in 08-09, they did in a matter of weeks. What it took for policymakers in terms of interventions in 08-09 on the fiscal front, this is much, much bigger. But it goes to the heart of the problem, that this is a Main Street economic collapse, and it has to be scaled and put in to the right people, to the right places.
And Steve, we all hope it gets better and gets better quickly. I'm catching up with your colleague Christine Bitterly a little bit later this morning, and part of the conversation that we'll be having with each other is maintaining patience and discipline in a big rally off the bottom like the one we've seen over the last month. Now, your base case is as the year grows older, the outlook gets better. But talk to us about maintaining that patience and discipline as you build out your portfolio just a little bit more as the months progress.
Well, as a starting point, we went into this crisis, and again, a certain amount, did not expect, again, that the U.S. and the world at large would be shut down like Hubei province. But we went in with overweights in U.S. treasuries and gold. We added to that in February. These are assets that even had some trouble in market illiquidity periods in the month of March, but we've maintained that. Now, in terms of our equity preferences, we've had a very strong sector preference. As I mentioned to Tom on the TV show earlier, that you would much rather be a healthcare company than with, making surgical masks, whether you have a good capitalization or not, whether you have a good balance sheet or not is irrelevant. You are in a sector where your product is in need. The digital economy, again, is taking over for the real economy. So it's outperformed. I think through time, you have to evolve this point of view that dispersion has been so great that eventually some of the more beaten down sectors, the ones that are fundamentally distressed, there are going to be opportunities among the better companies and the better securities in those areas. You just have to let that evolve gradually. The one thing the market has not had is patience, and that's something that, again, we can afford to have.
Steve, the conversation will continue. Steve Whiting of Citi, sticking with us as we count you down to Morgan Stanley numbers. Those results come in about 5 minutes' time. Equity futures this morning elevated by 12 points, up 0.4%. Let's get you some news, some headlines worldwide. Let's say good morning to Michael Barr.
Good morning, John, Lisa, Tom. The head of the World Health Organization's European office is hailing a show of support from around the world after President Donald Trump announced a halt to funding for the UN Health Agency. WHO's regional director for Europe, Dr. Hans Klug, says the office has been overwhelmed by the support of European countries. He also credited the U.S. for its historic support for the agency. Trump on Tuesday ordered a temporary halt to U.S. funding pending a review of its alleged missteps in managing and responding to the COVID-19 outbreak. The most significant obstacle to President Trump's push to reopen the country for business is the chronic shortage of coronavirus test kits. Bloomberg's Martin DeCarroll reports.
Public health experts, business leaders, and the nation's governors argue it will be difficult to safely send Americans back to work unless the shortage is resolved. Washington Governor Jay Inslee says adequate test kits don't exist in the United States right now.
We will need more testing after the transition than before. That seems counterintuitive, but it is the case because we'll have people coming back to work who are going to want to get tested.
Some federal help could come. Senate Democrats are unveiling a $30 billion plan for what they call fast, free testing in every community. They hope to include it in the next pandemic relief legislation. In Washington, Martin DeCarroll, Bloomberg Radio.
President Trump tried to force both houses of Congress to adjourn. It's an unprecedented move that would likely raise a constitutional challenge so that he can make appointments to government jobs without Senate approval. Global news 24 hours a day on air and on Quick Take by Bloomberg, powered by more than 2,700 journalists and analysts in more than 120 countries. Michael Barr. This is Bloomberg, John.
Michael Barr, thank you very much, sir. Thank you very much indeed. Headline just crossed on a Bloomberg: Volkswagen withdrawing its 2020 outlook. And I've got to be honest with you guys, every time I see a headline like this, I'm surprised that company X, Y, or Z was still providing an outlook for 2020. But apparently there are some of those companies still left.
That's been my impression too. Literally every single time I'm just thinking to myself, who's going to come out and say, we are confirming our guidance. We have complete conviction of the path of the next 3 months. That'll be interesting.
The last couple of days, John, have really been rocky. They've really been a shock to the system on so many different fronts. It's amazing to me to see where the market is right now. If you told me this news flow, I didn't know what was going on. I'd say Dow, thousands below where we are.
Sarah Ponzek of Bloomberg News did a great job on this, Tom, just in a lead that she wrote yesterday for one of her stories. Unemployment spiraling towards 20%. Retail sales just dropped the most on record. Global economists predict the worst recession in 8 decades. And stock investors have made peace with it all. Tom, it's absolutely remarkable. I agree with you.
Yeah, it's just extraordinary. The other thing I'd note is percolating up, John, is finally the EM. The IMF is doing little things, not dramatic, not making a lot of headlines, particularly in America, but they're doing little things here.
We'll carve out a little bit of time, a little bit later in the program, to talk about emerging markets. The equity market set up as follows. Morgan Stanley numbers a couple of minutes away. Equity futures ahead of that, up 11 points on the S&P 500, just off session highs, up 0.4%. From New York this morning, good morning. You are listening to Bloomberg Surveillance, live on Bloomberg Radio.
Asset managers who seize change to launch new strategies, add distribution channels, or exploit new technology to re-engineer the investor experience are often rewarded. However, in an industry paralyzed with complexity, few act with agility or decisively. Few run their businesses strategically. Yet the most competitive managers in the market know with the right partner and a flexible operating system, you can. Go boldly toward change with SEI Investment Manager Services.
Determination and operational strength are both essential factors for growth in asset management. I'm Steve Meyer, President and Head of SEI's Investment Manager Services Division. We know that disruptive forces create opportunities around the world. If you see potential in change, our industry specialists will maximize SEI's integrated platform of data and risk management, global investment operations, compliance support, and investor services to position your asset management business for success. Come grow with us.
With SEI Investment Manager Services, you lead the charge in a competitive marketplace. Learn more at SEIC.com/seize change.
Business is constantly evolving. Is your financial printer evolving to keep ahead of the curve? At Command Financial, we are redefining financial printing by providing industry-leading expertise, leveraging technology, and honing processes and best practices. Every day, Command helps SEC registrants, as well as members of their working groups, including securities attorneys and investment bankers, prepare, file, and disseminate regulatory and disclosure documents, such as registration statements, M&A documents, and mutual fund prospectuses and reports. Command provides a full range of services to help you effectively complete your deal, meet your disclosure requirements, and achieve your shareholder communications objectives. Visit our website at commandfinancial.com and learn how we're evolving, not only with the times, but also with your business requirements. Command Financial, redefining financial printing.
Influential conversations from...
This is a message from the government. Coronavirus is a national emergency, life-threatening for people of all ages everywhere in the UK. To help save lives, you must stay home. Only go outside for food, health reasons, daily exercise, or to work, but only if you cannot work from home. Stay home. Anyone can get it, and anyone can spread it. Stay home to help protect the NHS and frontline staff working to save lives. Coronavirus. Stay home, protect the NHS, save lives.
Hit the court anytime with these great NBA podcasts on TuneIn. The Low Post.
So what struck you about this potential head-to-head matchup? What did we learn now that Zion is involved and LeBron and Zion go at each other for the first time?
You know, I still think both teams have to figure out kind of who are their guys when they get into a fourth quarter. I think you saw that with both of them. There were some kind of odd moments.
The Ringer NBA Show.
Who ended up winning the thing. But I did watch for a little bit when it was DeAndre Ayton and Zach LaVine playing against each other. And then as the days went on, Devin Booker was involved. Tell me you've seen the clip of Devin Booker when I can't remember who his opponent was.
Or the Haber Show.
At the end, it's because I worked in the NBA in a front office, and you know, when I was 14 years old, my family moved back from Sudan to America. I jumped high school here in New York
Find these and more NBA podcasts right here on TuneIn.
And breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and on Quick Take by Bloomberg. This is a Bloomberg Business Flash.
And I'm Karen Moscow, and earnings from Morgan Stanley are crossing the Bloomberg. Fixed income sales and trading revenue beating analyst estimates. Equities trading revenue beating as well. We will have the full breakdown in just a moment. First, S&P futures up 12 points. Dow futures up 74. NASDAQ futures up 65. DAX in Germany is up 1%. 10-year Treasury, little change. Yield 0.62%. The yield on the 2-year, 0.20%. NYMEX crude oil up 1.1% or 22 cents at $20.09 a barrel. And COMEX gold is up 1.25% or $21.70 at $17.61.90 an ounce. The euro 1.0884 against the dollar. The yen 107.61. And that's a Bloomberg Business Flash. Tom, John, and Lisa.
Karen, thank you very much. Let's get to those Morgan Stanley numbers, shall we? First forward, wealth management coming in a little bit lighter on the revenue side than was expected. Net revenue $4 billion, the estimate 4.31. Sales and trading pretty decent on Wall Street in Q1. The good kind of volatility, apparently, because they've leveraged it to their benefit over the last several months, particularly at Morgan Stanley. We see that once again. I think it's going to be really difficult to repeat that trick in Q2, but certainly has happened at some of these banks in Q1, Tom. And there's the headline again. Capital and liquidity remain strong. That's coming from Morgan Stanley. And here's one for you. This is something we've been looking at the last couple of days. Just to throw another headline out there for you. Over 90% of employees are working from home at Morgan Stanley. Some incredible numbers on that front, Tom.
Yeah, and buried in it, and they do a nice set of headlines where it's almost in English, I think, Mr. Gorman and his people before that. And what to me is so important is the margin of 26.1% on wealth management. John, that's an act of God. That's absolutely industry leading. It's something, you know, with the Smith-Barney combo and all that, and there's experts better than me on this. But it is extraordinary how they mint money from the persistency of their wealth management.
Lisa, let's talk about it. Over the last couple of days, we've seen all the big banks report now. It's been interesting to see how much sales and trading has really offset collapses elsewhere. And my question, I think, for the next 24 hours through Bloomberg TV and Bloomberg Radio is, can they repeat that trick in Q2? Because the other side of the business is not going to pick up anytime soon.
Can they repeat that? And also, is it enough to offset some of the losses that we're going to see in the lending books? Morgan Stanley and Goldman Sachs lagging behind the JP Morgans and Bank of America for years as people looked at the lending books and the sort of investment banking units as the bright spots, investment banking aside from the trading and sales, and Goldman Sachs and Morgan Stanley traditionally being heavier in that. The tables have turned for a moment, right? This is sort of a narrative that's sort of unexpected because we've gotten so used to saying that trading underperforms and is volatile and the risk reward doesn't necessarily pay off. The question is, with $25 billion of loan loss provisions at the top 4 banks, we haven't gotten Morgan Stanley's just yet as we parse through the data. How bad is it going to get? And I've just, really, I'm struggling with this question, John.
Stocks a little bit lighter in the pre-market, down around about 0.5% on the session. On the year, it's been brutal for some of these names. I'm really pleased to say they're still with us to respond to this. Is Steve Whiting at Citi Private Bank. Steve, I'll keep things general because I know you can't do name-specific conversations, but as a general topic of conversation for this sector at the moment, a lot of our listeners look to some of these big names for dividend income. They're trying to work out whether some of these dividends are vulnerable. What would you say back to them?
Look, I think it's going to vary again between large and small and where the exposures really are. And that, again, we came back to this being very much a Main Street economic crisis. So, it really comes down to whether there's a good deal of lending there. In the case of U.S. banks, you had a very large buffer in terms of share repurchases that could be cut. When you take a look at Europe by comparison, it was paid out in dividends. So I think that there's probably a meaningful gap here that favors maintaining dividends among larger financials in the United States.
So, Steve, Neil Kashkari, the Minneapolis Fed president, disagrees with you. He was writing in the Financial Times that big U.S. banks should suspend all dividend payments and actually raise $200 billion in equity capital to make sure that they can withstand whatever is coming and that they can at least inoculate their balance sheets ahead of pain that we cannot predict. What's your view on that?
I think that there's, again, a point of view from Europe, from the United States, from others around, how firms should be regulated around this. And when I think about the economic crisis itself, again, looking at what American financials did from 08-09, we had the largest de-risking since the Great Depression. We had a doubling of equity capital, reduced lending in terms of risk-based lending. So a great deal of things has made the financial system safer. I grant, again, that the nature of this economic collapse, who would think that the economic collapse of 2008, 2009 could be exceeded in scope? But I'm relatively hopeful here that if I were to take a look at financials versus energy companies, for example, both in the value sector of the market, that the duration of the drop in the energy markets, for example, is probably longer, more profound than it is for financials generally in the case of the United States.
Steve, the financials, are they going to be able to deliver the cash flow that a lot of people predicted in 2010, 2011? Can you look out 1 year, 2 years, 3 years and say as a blended group, American finance will be able to deliver the use of cash?
I think the whole outlook, has changed. That, again, this is a new cycle where expectations have to be reset. I think that there is, and that's, again, across the whole economy. So there's clearly been so much dispersion. Why would the healthcare, I said this earlier, that the healthcare sector is not going to have a setback at all. A good deal of the digital economy, software as a service, for example, is not going to have a setback that's very meaningful. Very, very minor cyclicality compared to that. When it comes to real estate markets, you may end up with very different uses, lower levels of activity, and on your way back, it's a very, very long ride up. Now, there's also these distortions in growth rates. I'll just give you a really extreme one. Movie theater receipts, for the last few weeks in the United States have been about $5,000 per week. If you go back a year ago, they were $200 million per week. So what is the growth rate? To get to $10,000, which is nothing. It's 100% growth rate.
Steve, I remember my parents would give me 50 cents and we could see 3 movies in the afternoon, John.
Good times.
Can you imagine? Imagine the United States again, this whole country with $5,000 of movie theater seats. But so you just think about how some of these numbers look in depressed industries. You can have really, really big numbers in terms of growth rates. So I think it's are we down from 2019 and rebounding rapidly, or if you want to think about what parts of the economy are even larger, a minority of those.
Steve, we've got to leave it there. Always great to catch up with you. Steve Whiting there of Citi, weighing in on the equity market and the financials as we wrap up earnings on Wall Street. Morgan Stanley coming through. The stock pretty much unchanged on the session now in the pre-market, down by 25% in 2020 so far. Much more still to come right here on Bloomberg Surveillance Live on Bloomberg Radio.
Imagine being denied an apartment because of your religion, or your race, or because you have children, or a disability.
It's so wrong. Yes, but who has the power to stop this?
You do. Each of us has the power. The law is on your side. It's illegal for landlords to discriminate because of race, color, religion, sex, national origin, disability, or familial status. If you suspect that you have experienced housing discrimination, file a complaint with HUD immediately so we can investigate it. Fair housing is your right.
Use it.
To learn more, visit HUD.gov/fairhousing. That's HUD.gov/fairhousing. Or call 1-800-669-9777. 1-800-669-9777. A public service message from HUD in partnership with the National Fair Housing Alliance.
Why do hedge funds and other alternative managers rely on Pershing for a highly personalized experience? Mark Alderati, a managing director at BNY Mellon's Pershing and head of Prime Services, explains.
In today's fast-paced environment, where the only constants are change and volatility, you need a prime broker who's both steady and agile, focused on supporting your needs so that you can focus on growing your business and producing results. Exceptional client service and advocating for our clients is at the core of what we do. Our award-winning high-touch team is just one of the benefits of working with BNY Mellon. We help alternative investment managers create great experiences for their clients. Whether it's customized financing, securities lending solutions, platform access, or outsourced trading, BNY Mellon's Pershing is a prime broker who's committed to this business and dedicated to meeting your evolving demands.
To learn more about the unique and industry-leading solutions for hedge funds and other alternative managers, visit Pershing.com. Pershing LLC. Member FINRA, NYSE, SIPC. This is a Bloomberg Money.
This week on the New Yorker Radio Hour, we'll look at race, politics, and the pandemic.
Social distancing is critical, but you have to have a certain class position, really, to be able to fully engage that practice.
I'll talk with Kianga Yamada-Taylor. Listen to this episode of the New Yorker Radio Hour on TuneIn today.
Did you know with TuneIn's local radio feature, you can stream live FM and AM stations in smooth streaming quality and discover local news, talk, and music stations you didn't even know existed. Navigate to the local radio section under Browse to listen locally on TuneIn.
Be part of the college sports conversation on TuneIn. Hear the latest storylines around SEC football with the Paul Feinbaum Show.
I distinctly remember when you were hired, and I must say most of us thought you were out of your mind. Giving up, I wouldn't call it a cush job because you were traveling across the country.
Get your college hoops fix with college basketball talk on NBC Sports.
Headed by Shabazz Napier, that also included Amita Brima, who is in and around the NBA ranks right now, and DeAndre Daniels, who was the 37th pick in the 2014 NBA draft. So my question to you is...
Or listen to the daily news from around the wide world of college football with College Football Live.
I would go with Utah. I think Utah is the better team. And I know I'm talking to an Oklahoma guy, but listen, and it may be recency bias having watched Utah last week and doing that game, but I just think they're a more complete football.
Discover these and more college sports podcasts right here on TuneIn.
Broadcasting live from the Bloomberg Interactive Broker Studio in New York. Bloomberg 1130 to Washington, D.C. Bloomberg 99.1 to Boston. Bloomberg 106.1 to San Francisco. Bloomberg 960 to the country. Sirius XM Channel 119 and around the globe. The Bloomberg Business app and BloombergRadio.com. This is Bloomberg Surveillance.
From New York City, this is Bloomberg Surveillance for our audience worldwide. We're live on Bloomberg Radio, 2 hours away from the opening bell. Equity futures set up as follows for you this Thursday morning. We advanced 14 points, up 0.5%. In the bond market, Treasuries unchanged. Your yield on a 10-year 0.62%. In foreign exchange, the dollar showing a little bit of strength again against the bulk of G10 this morning. Euro dollar coming in 0.25%. And crude rebounding just a little bit. WTI getting its head back above $20 a barrel. $20 and around about 10 cents, Tom.
Yeah, I like what you say there, John, about just sort of a churning here. It's really happened that way over 4 or 5 days. Before we get to a really important guest, John, and we got Morgan Stanley to talk about and the rest. About 3 weeks ago, John, somebody took me to task on Twitter because I was doing exponential and logs instead of more conventional mathematics on this pandemic. I led the 6 o'clock television this morning with one statistic. Let me give it to you, John, because I think it's just a shocking ability. We had 1 million cases of the pandemic in 4 weeks. The next 1 million happened in 12 days.
It's unbelievable.
That's the power of exponential math that these brave people in medicine, like at Johns Hopkins or Peter Hotez at Baylor, that's the math they're dealing with.
A little bit of hope in the last 24 hours. In fact, the last week that maybe we're past the worst of it. Lisa, the President of the United States, Donald Trump, saying the data suggests that the US has passed the peak in new cases. There was a headline that crosses the Bloomberg right now implies this isn't over yet for the global economy or for the global healthcare system either. Japan and the Prime Minister Shinzo Abe saying they will expand the state of emergency to the whole country. Now, this is the problem at the moment. Germany is just trying to reopen through the month of May. They're going to do it very slowly. They're talking about reopening schools in May. And I think as we start to see other countries do the same thing, there's going to be increasing pressure on countries like the United States, like the UK, to come up with plans to reopen. And of course, every country has had a very different experience with this. Some countries have tested way more than others, Germany being one. Others haven't done enough. People arguably would say the same about the UK and the United States. And with that in mind, Lisa, if we're all at different stages, can you really come up with a huge sweeping statement about where we are for the whole thing?
No, because also it's a rolling kind of pandemic. I mean, there was also a headline this morning that Spain reported more than 5,000 new virus infections, which was the highest in 1 week. And there's a sort of conundrum. The faster you open, how do you ensure we don't just get a resurgence in viral cases? And this is a global economy, even with the borders shut. So how do you ensure that one region doesn't reinfect another? A very difficult proposition, both financially, but more importantly, from the health perspective.
A big focus on the healthcare system a little bit later in the program. We need to pick up on the financials just for a little bit and bring in Gerard Cassidy, RBC Capital Markets Head of US Bank Equity Strategy. Gerard, there's a little bit of tension for me at the moment, and it's this uncomfortable calm around some of the financials. Now, you've drawn a perfect distinction. I'm not talking about a balance sheet issue. I'm talking about an earnings issue and how long they can maintain dividends, maintain payroll in an earnings environment like the one we're going to be in, not just for the next quarter, but the next several quarters. Gerard, what's your take through the last couple of days?
Thank you, John. I would say that we are seeing clearly all of the large banks build up their loan loss reserves through enormous increases in the loan loss provision. So these aren't credit losses that have been recognized. What they're doing is they're building up the reserves for expected credit losses over the life of the loans. So I think what you're going to find, it's all going to be economic driven. If you believe the U.S. economy is going to start to grow in the second half of the year after a unbelievable contraction in the second quarter, then the banks, I think you're going to find, are going to be able to maintain the dividends. However, if you think a recession lasts not just in the second quarter, but through the end of the year and into next year, then dividends would be vulnerable.
Gerard, the number one question to you always, and this is you and me going back decades, is bank consolidation. Is this pandemic a catalyst for the further consolidation of American banking?
Tom, very good question. I was on with a trader this morning talking exactly about that, and the answer is yes. Is it going to happen in the next 90 days? Probably, obviously not. But I would say that after we get through this,
right,
and the time to pick up the pieces, I think you're actually going to see this be a catalyst for some of the biggest regional bank mergers that need to be done.
Gerard, you write 24-page reports. I've never read a complete one. I mean, I can't get past page 3. But somewhere, Gerard, about page 15, you are expert on digital investment. You are truly like you've got nailed who's walking the walk and talking the talk of the digital world. How unprepared is mid-sized and small banking to compete with Diamond, Moynihan, and the rest of them in the digital space?
I would say it comes down to the smaller regional banks that have the biggest challenge. Our bigger regional banks are, I think, very equipped to compete with the Moynihans at Bank America or the Diamonds at JP Morgan. But the smaller community banks, I think, are the ones that aren't able to offer the best-in-class digital service. It's okay, but it's just not best-in-class. So it's going to make it tougher for them, Tom, particularly with many of their small to mid-sized commercial customers.
Gerard, everyone's been talking about how banks are so much better capitalized this time around than they were back heading into the 2008-2009 financial crisis. You have Neil Kashkari of the Minneapolis Fed coming out this morning saying just in case the banks should raise $200 billion of equity, just in case. Are there specific banks within the large cohort that are particularly vulnerable, that after earnings you are a little bit concerned and do think they need more capital?
None at this point. It was a surprising piece he wrote, and I find that some of these policymakers, whether it's the former policymakers that were on board during the crisis, are all coming out and saying that dividends should be cut, bonuses should be suspended, and now with his comments about capital to be raised. Unless you're really expecting this downturn to be more severe than some of the projections and for it to last into 2021, the banks right now are, from a capital standpoint, very strong. The capital ratios for all of the major banks continue to be well above required levels. And at this point, unless you're really bearish that we're going to have a long, extended downturn, there doesn't seem to be a need to raise capital today.
Gerard, just before we let you go, let's relax this conversation just a little bit. You know these companies better than most people we speak to. You know the management teams as well. The PR front of some of these names over the last couple of days has been incredible. If you just compare and contrast the reputation of the banks in this environment to where we were 12 years ago, Gerard, how much work is going into the PR of the earnings releases of the last couple of days?
John, you really brought up an interesting point because in 08-09, the banks were the problem. Now they're the solution to the problem. And they have been very clear. If you read the first pages of their press releases about what they're doing for the communities in which they serve, their people, their customers, they are on an incredible go forward, beating their chests, deservedly so, though. I mean, they don't ever get credit for helping out. They're always the source of problems to many people, but they are stepping up to the plate, the industry, especially the large banks, what they're doing.
Yeah, I believe I saw Mr. Moynihan with a no-fire policy in their announcement the other day. Gerard Cassidy, thank you so much. I promise I'll try to get to page 18 of your 24-page report next time. He is with RBC, and his reports are wonderful. Of course, we protect the copyright of all our guests. Get the Cassidy work from RBC. The Bloomberg NJIT STEM report, brought to you by New Jersey Institute of Technology, ranked one of the most research-intensive universities in the nation by the Carnegie classification. More at njit.edu/R1. Here's Bob Moon.
Tom, Lisa, Jonathan, good morning. Here's what's making news in science, technology, engineering, and math. I'll just say it. The circumstances are awful, but it's pretty cool to be able to broadcast live from my bedroom. Still, there's a whole crew working from home in Southern California that has all of us beat when it comes to the cool factor. In between running out to the kitchen for breakfast and getting the dog to quiet down, they're working remotely from their home offices all the way to Mars. It's the team that's operating NASA's Curiosity rover on the Red Planet. For several weeks now, they've been communicating with their Jet Propulsion Laboratory colleagues using video conferencing and messaging apps. Now, I hope the boss is listening, because even though the first attempt at signaling the rover to drill into a Martian rock sample went smoothly, JPL does say it's taking those really smart scientists a little extra time to line up all those commands from home, 1 or 2 hours more than it normally would. A Defense Department watchdog found no evidence that the Pentagon's hotly disputed decision to award a $10 billion cloud computing contract to Microsoft resulted from interference by President Trump, though it leaves unanswered questions. The deal was challenged by Amazon, which lost out on the bid. Its chief, Jeff Bezos, also owns the Washington Post, where coverage is a frequent source of complaints from President Trump. The 317-page Inspector General's report said it found no evidence of interference, though it noted the White House blocked clear access to witnesses. That's the Bloomberg NJIT STEM report. Tom, Lisa, John?
Bob Moon, thank you, sir. Thank you very much. Here are your headlines, your news worldwide. Here's Michael Barr.
Thank you very much, John. Lisa, Tom, citing the coronavirus, President Trump is threatening unprecedented action, adjourning both houses of Congress to entice the Senate to approve more of his nominees.
The Senate should either fulfill its duty and vote on my nominees, or it should formally adjourn so that I can make recess appointments.
California Democratic Senator Kamala Harris says she thinks the president is just trying to create a distraction.
To deflect from the fact that he has failed to be a leader during a pandemic, a public health crisis, and economic crisis facing our country. I frankly think we got to stop waiting for him to act like a president.
President Trump says he will unveil guidelines to relax stay-at-home rules today, citing signs that the coronavirus outbreak is plateauing in parts of the country. Earlier, President Trump spoke with more than 200 leaders to seek input on reopening the country. Executives from the finance industry told the president that more testing for the virus would have to be in place before people would be comfortable returning to work. The coronavirus has infected nearly 620,000 people in the U.S., leaving more than 27,000 dead. As the coronavirus tips the U.S. into what may be the worst recession in decades, a troubling reality has emerged. Some of the hardest-hit states were the least prepared for the economic fallout. According to data from the National Association of State Budget Officers, New York and New Jersey, the two states with the most confirmed cases, have rainy day funds that are among the smallest in the nation. Global news, 24 hours a day, on air and on Quick Take by Bloomberg, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Michael Barr. This is Bloomberg, John.
Michael Barr, sir, thank you very much. Your news, your headlines with Michael Barr from New York City. Here's some of the price action for you. Morgan Stanley just a little bit lighter in early trading, down 0.9% on Morgan Stanley's stock off the back of some earnings that were pretty decent on the sales and trading side of things. Wealth management just a little bit lighter. The call will take place at 8:30 Eastern for anyone interested. The next stop for this market, guys, Tom, it will be 8:30. Initial jobless claims around about 45 minutes away.
And as you said, the survey's wide. The last couple of weeks, the survey has not been accurate. It has been a bigger, larger number. Why, John, would this time be different?
Well, I've been trying to work this out, Lisa, and I wonder whether 6 million in and around is the limit of the capability to process this many claims. And I just wonder whether the 6 mark is the mark, that they can only process so many every single week, and perhaps there's still a bigger backlog to get through as well. Just something to think about as we approach this number.
That's actually exactly what I was thinking. In other words, this doesn't actually reflect job losses. It reflects the processing capabilities.
We'll
John,
talk about
that's
it
really the issue.
A little bit later this morning. 8:30 is when the number comes out. A real ugly data point that I think speaks to the economic pain of the moment we're working our way through right now. And we'll try and bring you some clarity on that pain a little bit later this morning. From New York, you are listening to Bloomberg Surveillance.
With a Bloomberg Business of Sports report, I'm Michael Barr. Houston Rockets owner Tillman Fertitta talked about the impact the global pandemic has had on the league and his team. Fertitta told ESPN his organization has been able to keep everyone despite the pandemic because of his business plan.
I mean, it's horrible. I mean, you know, it's horrible for all of us. I mean, it's horrible for the players. You know, we haven't had any staff reductions at the Houston Rockets. We haven't asked anybody to take any pay cuts at the Houston Rockets because all my businesses operate in a silo, and that's a very well-financed and very successful business.
Fertitta says they all want to get back to basketball and play in front of the fans, but doesn't believe that it is possible or the right thing to do. And that is a Bloomberg Business of Sports report. I'm Michael Barr, brought to you by Grainger, offering supplies and solutions for every industry. Visit Grainger.com.
Message and data rates may apply. T&C and privacy terms can be found at babbel.com/terms. Please don't text and drive.
Have you wanted to speak a new language, but you thought it'd be too hard or take too much time? Then try Babbel for free by texting EXPLORE to 64,000. In just 15 minutes a day, you'll be on your way to speaking a new language in just a few weeks. And right now, you can try Babbel for free. Babbel starts out teaching you words and phrases by matching them with pictures. You won't believe how easy the interactive program is. Soon the sentences get a little bigger, and before you know it, you're having simulated conversations voiced by native speakers. And because Babbel is crafted by language experts and uses the spaced repetition method, in just 10 to 15 minutes a day, you'll be speaking the language of your choice with real confidence. With Babbel, you can speak a language. Just text EXPLORE to 64,000 and start your first lesson in the language of your choice for free. Download the Babbel app or text EXPLORE to 64,000 and try it for free. Text EXPLORE to 64,000.
Where will 2020 take you? Somewhere where people care about each other, about our planet, about creating a better world for everyone, and becoming the best versions of yourselves. Join a community of like-minded individuals at the University of Winchester. Make sure to accept your offer by the UCAS deadline and visit our website to find out more. See the bigger picture. Be the difference. Go to winchester.ac.uk.
Keep up with everything happening in the wild world of pro wrestling with a podcast on TuneIn. For expert analysis straight from the WWE to Steve Austin's no-holds-barred conversations with wrestling's biggest personalities, search sports and scroll down to the world of wrestling to listen.
The Right Time with Bomani Jones.
While he was gone, Al had some kind of vote to make him the managing. You remember he used to come up all the time in the Raiders game that he was the managing general partner. By the way, don't forget, there was a lot going on in Munich. But you know how tired that man was to come back and find out that Al Davis had strong-armed his team from him while he was gone?
Search The Right Time with Bomani Jones to listen.
Get ready for the 2020 NFL Draft with TuneIn.
Do your homework on this year's top prospects, rising stars, and late-round sleepers with football podcasts like Move the Sticks.
Is my pick because I know he is an athletic freak, a guy that is capable of doing it all. He can blitz, he can run, he can cover.
And when the draft gets underway on April 23rd, follow every round and every pick for free.
In the 2018 NFL.
It's always football season on TuneIn.
Breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and on Quick Take by Bloomberg. This is a Bloomberg Business Flash.
And I'm Karen Moscow. Morgan Stanley down 0.9% after the bank reported wealth management net revenue of $4 billion, missing analyst estimates of $4.3 billion. BlackRock reported flat earnings in the first quarter. BNY Mellon boosted its provision for credit losses, and Abbott Labs profit beat. U.S. stock index futures, they have been trimming their gains, with S&P futures up 3 points now. Dow futures little changed. NASDAQ futures up 42. The DAX in Germany is up 0.9%. 10-year Treasury up 7/32, yield 0.60%. The yield on the 2-year 0.20%. NYMEX crude oil up 0.9% or 18 cents at $20.05 a barrel. COMEX gold is up 1.2% or $20 at $17.60.20 an ounce. The euro 1.0872 against the dollar. British pound 1.2485 and the yen 107.68. That's a Bloomberg Business Flash. Tom, John, and Lisa.
Karen, thank you very much. What a couple of months it's been. We've had a bear market. Some rogue investors might call it a bull market in the last couple of weeks. Tom, a rally of 24% off the March 23rd low. It has been quick. It has been fast in both directions.
And quick is the Greek letters, and there's no one better to talk to about the quickness that we are all living. And Savita Subramanian, Bank of America, head of U.S. Equity, a quantitative strategy. Tell me about the Greek letters, Savita. What does gamma, what does delta say about this unusual time?
You know, I think we've had a fast and furious comeback in the market. I think what's
really interesting to look at today is just the valuation of the market. So two things have happened over the last month. The market has gone down and then up pretty quickly. And then you've also seen earnings revised down pretty aggressively. So what's happened is the PE of the market, the price to earnings ratio, has actually risen to almost the same highs that we were at in February, which means the market is again very, very expensive. And this time it's because earnings are lower and the price is back to pretty aggressive levels. So I guess when we look at the market today, we think, okay, it looks just as expensive as it did about a month ago, and we're not out of the woods yet. So we've got employment likely to get worse before it gets better. We've got a lot of uncertainty around timing in terms of business resumption. We've got kind of a very muddled earnings season where a lot of companies are just shutting down guidance because they have kind of a no visibility in terms of what's going to happen. I don't know. When I look at this, I think, okay, we've come back pretty quickly, but do we really have the underpinnings, the fundamental underpinnings of a strong bull market from here? And I think that's the big question mark for me.
Yeah, and when you talk about questions, we used to say pay attention to fundamentals, and now people are saying numbers don't matter, we're flying blind, it's bad, we don't know how bad, it doesn't matter how bad as long as we get a sense of when it actually starts to come back. What's your compass right now for deciding whether to buy or sell?
Yeah, I think it's a really good question, and I think the way we're thinking about things is more just the short term is so fraught with uncertainty that it might just make more sense to think about a normalized earnings approach. Just, what are earnings going to look like over the next few years? Does the global pandemic change a lot for the earnings composition of the S&P 500? And I think there are puts and takes. So I think if you think about travel and commercial real estate, we might be less inclined to see those areas continue to receive the amounts or to continue to generate the amounts of revenue they have to date. As this sort of hastens the work from home, less reliance on office space aspect of the economy. But on the flip side, if companies are paying less for office space and corporate travel, then maybe that's good for margins. So I do think that there are, kind of positive offsets to normalized earnings. But here's our take. We think that normalized earnings is going to be about 10% lower than what we were expecting prior to COVID-19. And I think that's not so bad. I think stocks are still offering a relatively competitive return to most other fixed income assets. And, kind of thinking about our quant models, I think one of the things that we find interesting is that valuation doesn't really matter for the short term, but it does seem to matter quite strongly for the long term. The R squared on the PE ratio of the market over the next 10 years is above 60%. So that means that valuation is really important in terms of describing what the market's going to look like over a 10-year time horizon. And returns right now look like they could be in the 3 to 4 to 5% range over the next 10 years. If you add on a 2 to 3% dividend yield, that's 7% returns. That's not bad in an environment where interest rates are super low and most fixed income assets aren't going to offer that type of quality adjusted return. So I think longer term stocks still look good to me, but I think they've come back a little bit too quickly.
Savita, help us understand then, with all of this in mind, how useful earnings season is.
Yeah, I mean, it's a great question. So I think that earnings season is a little bit of a guessing game. A lot of companies aren't going to give you guidance. If you look at the dispersion of analyst estimates, we've reached all-time highs. Nobody knows what's going on. So I think that, what you want to pay attention to this earnings season are surprises. One of the things we found interesting was that in prior periods when dispersion of analyst estimates was this high, surprises were actually rewarded more than usual. They were rewarded 3 times as much as usual. So I think that earnings beats in this environment are going to be very sparse, but they will definitely see much bigger rewards than what we've experienced historically. So I think that's what we want to pay attention to this earnings season. I don't know if we really want to pay attention to guidance because I think companies, just like you and me, don't really have a good sense of how this year is going to shape up.
I'm not sure who's still providing guidance. Savita, always great to catch up with you. Thanks for the hard work from the team, especially at a time like this. Savita Subramaniam there of Bank of America. We were talking about this a little bit earlier, guys. Lisa, I mentioned it. If you're still providing guidance, I don't know what you're doing. I thought everyone had just thrown the kitchen sink in a couple of weeks back.
Yeah, the only place where I guess that there was some guidance, I thought overnight, the chip maker for Apple and
Taiwan
some others.
Semi.
Yes, exactly.
Yeah.
For Huawei and Apple, actually saw an increase in expected capital expenditures because everyone's on their smartphones and screens. They're doing great. So, I mean, I guess that perhaps you're getting some guidance as far as the transformation of the economy.
Actually, that's really interesting because there's a chip maker that typically we would consider a very cyclical company, a proxy for global growth. And in many ways, when you go through that earnings statement and the stories around it, it looks like a defensive company that is leveraging a situation where people are staying at home, sitting on their smartphones and streaming video.
It's actually phenomenal. This company's revenue rose 42% in the first quarter, just giving you a sense of the demand for semiconductors. And it's ironic because this had been one of the areas that had been most volatile in the past couple of years in response to different cycles and different concerns about trade wars. Now, the tables have really turned.
We've all got to kind of get our hands around the companies that are doing well in this environment and can do well going forward. We'll continue to do that on this program as we count you down to an ugly data point 35 minutes away. Initial jobless claims in the United States of America. Your median estimate around about 5.5 million with a huge range either side. The low estimate 2 million, the high estimate 8. Ahead of that, a directionless market, equity futures unchanged, in and around positive 5 points on the S&P 500, up around about 0.2%. In the bond market, treasuries unchanged. Your yield coming in a couple of basis points, 0.6% on a 10-year. This is Bloomberg.
Vatal Shah is senior. This is a message from the government. Coronavirus is a national emergency, life-threatening for people of all ages everywhere in the UK. To help save lives, you must stay home. Only go outside for food, health reasons, daily exercise, or to work, but only if you cannot work from home. Stay home. Anyone can get it, and anyone can spread it. Stay home to help protect the NHS and frontline staff working to save lives. Coronavirus. Stay home, protect the NHS, save lives.
Did you know with TuneIn's local radio feature, you can stream live FM and AM stations in smooth streaming quality and discover local news, talk, and music stations you didn't even know existed. Navigate to the local radio section under Browse to listen locally on TuneIn.
Behind the highlight reels, championship rings, and colossal paychecks, there are sports stories that fuel, deepen, and even challenge our love for the game. For true tales of underdogs, anti-heroes, and game-changing innovators, search sports documentaries on the TuneIn app. Hit the court anytime with these great NBA podcasts on TuneIn. The Low Post.
So what struck you about this potential head-to-head matchup? What did we learn now that Zion is involved and LeBron and Zion go at each other for the first time?
You know, I still think both teams have to figure out kind of who are their guys when they get into a fourth quarter. I think you saw that with both of them. There were some kind of odd moments.
The Ringer NBA Show.
Who ended up winning the thing. But I did watch for a little bit when it was DeAndre Ayton and Zach LaVine playing against each other. And then as the days went on, Devin Booker was involved. Tell me you've seen the clip of Devin Booker when I can't remember who his opponent was.
Or the Haber Show.
At the end, it's because I worked in the NBA in the front office, and you know, when I was 14 years old, my family moved back from Sudan to America. I went up high school here in New York
Find these and more NBA podcasts right here on TuneIn. Keep up with everything happening in the wild world of pro wrestling with a podcast on TuneIn. For expert analysis straight from the WWE to Steve Austin's no-holds-barred conversations with wrestling's biggest personalities, search sports and scroll down to the world of wrestling to listen. Get your MLB fix with these great podcasts on TuneIn. Fill your seventh inning stretch with the Ringer MLB Show.
I just can't get over it. It's like, oh, well, Jeter Downs didn't realize he was a top. Like, my dad is drinking the Kool-Aid on this. He's like, of course. You know, Mookie was going to leave. I'm like, what do you mean? You don't know that.
Slide into second with the Starting Nine podcast.
Nolan Arenado slides right into the top spot for a favorite baseball player.
active in the league right now. It is a pleasure to be sitting next to you, sir.
Thank you, man. I appreciate it. Thank you.
This is we've been waiting a long time for this. We actually, in terms of like active
Round the Bases with the StatCast podcast.
Ways of going about it. I picked third, so in some ways it made it easier for me. Mike, just to go over the first couple of picks, Mike took Barry Bonds, who I think was kind of the obvious guy to take number one. Not only
catch these and more MLB podcasts right here on TuneIn.
The first time.
We always talk about the losers in a trade war.
You benefit if you're just further away from China.
So that you can too.
What are the ramifications if she crumbles or doesn't crumble?
Bloomberg Radio, the Bloomberg Business, Radio.com, and iHeartRadio apps, and BloombergRadio.com. Bloomberg, the world is listening. From the financial capital of the world, 24 hours a day at Bloomberg.com, on the Bloomberg Business app, and on Quick Take by Bloomberg. This is Bloomberg Radio. This is Bloomberg Surveillance Economics.
Once we get through coronavirus, it's very supportive and very stimulative.
Central banks themselves got caught hostage by markets.
Finance.
OPEC Plus is at war with itself.
We know we can create America's energy independence again.
Investment.
The market's anticipating the rate getting very close to zero in fairly short order.
Volatility is back, so that's going to make for more cautious trading.
Bloomberg Surveillance with Tom Keene, Jonathan Farrell, and Lisa Abramowitz on Bloomberg Radio.
Good morning, everyone. John Farrell, Lisa Abramowitz. I'm Tom Keene. We welcome all of you to Bloomberg Surveillance. Welcome across this nation as we look for the third, or is it the fourth week of horrific jobless claims. We'll see that here in 29 minutes. There are so many cross currents going on. John Farrell just mentioning, folks, what was widely anticipated. Mr. Abe just simply caves in and takes X number of prefectures in Japan and extends it out to a lockdown across the nation of some unique Japanese variety. There is news of the pandemic. There is news of this financial system. And of course, we saw Morgan Stanley earnings later. James Gorman with Bloomberg here, I believe, in a number of hours. We'll look forward to that on Bloomberg Television and Bloomberg Radio. John, within all this, I think you nailed it early in maybe your first data check of our radio program here, that the markets just oscillate right now.
Not much direction at all, to be honest with you, Tom. Futures are pretty much unchanged. The focus today is on the normalisation process. We're looking for a decision from the United Kingdom on what they're going to do with their date to shut down and perhaps reopen in the future. New guidelines apparently coming a little bit later, Lisa, as well, from the United States and President Donald Trump. I think there's a lot more pressure now, especially over the last week, to put on the governments to at least outline their plans to reopen. If not give us a date, at least show us how you're going to do it.
Yeah, and how do you show us, right? I mean, is it in a sort of draft of a plan? Europe kind of put something like that out, or is it in just the numbers of tests that you have available? Because ultimately it comes down to testing capacity here as we look forward at the ability to track and surveil people who potentially could go back to the workforce that may have the antibodies.
Yeah, just to remember, Tom, sorry, just to jump in, there's other business that needs to be done, certainty.
What does that mean? It's so refreshing, John. I mean, I don't mean to make light of it in this tragic time that we're in, but I don't think we've talked Brexit in 5 weeks.
Well, hasn't that been a welcome development?
Yes, translate, John. What does it mean if Prime Minister Johnson recovering at Chequers, what does it mean that he's saying, no, we're moving forward?
Well, they've got until the end of the year to negotiate the future relationship, and most people think that the Prime Minister would have to backtrack on any promise not to extend it because of this situation we're in right now. But quite clearly, the Prime Minister's spokesperson is making it clear this morning that if anyone asks for an extension, we won't be providing one.
I mean, Lisa just sent me across our communication systems here, folks, as we all work from our home. She said, let's continue this theme. John, Premier League in June, what do you think?
No, there's actually a real chat about how you finish the leagues. Everyone's going to have their own plans. To be honest with you, I know many people would like to see the sporting world come back and come back quickly. I just don't see how they get this done, Tom. I really don't. And what, are they going to do it in a month? And what happens to the baseball season, which hasn't even gotten started? When you have a sport, how many games a year do they play?
162. Come on, John. That's un-American. You're supposed to know that, John.
How are you going to fit in that many games without going deep into winter?
No. Well, they're going deep, as some would say, John, in the old school, they go deep into winter now because of this idiocy of playing into October and almost November. We will continue this discussion. John has been very good about not talking sports because I've had to be sedated over Mr. Kane of the Tots. So we'll move forward from here. Daniel Morris with us right now. I really want to drive forward this conversation. We just spoke to Savita Subramanian. Daniel, with BNP Paribas and investment strategy. Dan, I've been dying to ask you this question. It's clearly more than barbell. This is a market that is advanced on the backs of the digital. People are gaming out the new economy, and of course, Amazon is a poster child of this as well. Can you construct an investment strategy based on a narrow theme of digital superiority?
Very sorry, we have a terrible connection and nothing's coming through.
That's okay, Dan. We're going to leave it there. Dan Morris of BNP Paribas.
Digital superiority.
That was the longest delay. I thought he was smoking on his
Well, shall I give our listeners? Let me give our listeners some insight, Tom, as to why that happens sometimes. On television, we have this situation where sometimes the people watching can actually hear the guest, and the people anchoring can't hear the guest. So on radio, we end up in this situation where you ask a question, Tom, and we're not quite sure whether our listeners can actually hear the response or whether that guest is not there at all. And it just speaks to this real huge technical effort. And for the listeners out there that don't know, we're all at home in our different homes, spanned out across Manhattan, and it's really, really difficult, technologically speaking, to execute a program like this. So believe me, the fact we're still on air is just a fantastic effort from our team back at HQ to get this done.
And Lisa, what was great about this, 3 p.m. yesterday, I got an email from a guy named Al from New Jersey. He said, Tom, have you paid your phone bill? And, that's what we're working off phone lines, folks. And it's not like party lines. I mean, John, you're too young to remember party lines where people had 5 lines around, you could hear the family next door on the phone and all that. But it's pretty close. I mean, we're making it up as we go.
Look, this speaks to the new economy, and it speaks to, frankly, the question that you were asking Daniel Morris of BNP, who before he got cut off. But it goes to this idea of the bright spots that you're seeing remain tech, and that's actually becoming the haven of investments. To me, that's fascinating, and it sort of raises a question of tech being the leaders in a very different manner when the market does start to recover.
You're joining us right now, Chief Investment Strategist for Coventry, John Farrell, with us, and also Lisa Abramowitz as well. John, let me go to you on this because I think it's absolutely critical that the mathematics of the indexes now don't matter because the dispersion's been blown up with a lot of losers in value, a lot of losers in small cap, and, a few digital types going to the moon.
Well, we can do the sector weighting quickly if you want. IT, information technology on the S&P 500, 26% of the index.
Wow.
Just rounding up for you. Healthcare at about 15.5%. So heavily weighted to IT and to healthcare as well. So if you think about what's doing well at the moment and why the S&P 500 is so well supported, it speaks to some of the weightings relative to, say, what Europe is going through at the moment, Tom.
Yeah, absolutely. Let's try to bring in Daniel Morris again with BNP Paribas. Daniel, we hope you're there, and I hope we have a better connection with you right now. What is the view forward, Dan? Off the bottom, 20% recovery, away we go.
Yep.
And what's the reset now for you in BNP Paribas?
Well, as the market's going up, we're certainly becoming more cautious. If you think about what's changed over the last, 2 to 3 weeks to justify that big of a rebound, we don't necessarily see enough support for it. And the other thing to keep in mind, let's go back to the initial correction. I think the market's S&P 500 was down 34%. And if you look at the forecasts that are out there for GDP growth, in the second quarter, minus 30% annualized and so on, even that minus 34% isn't necessarily big enough, let alone subsequently to have a 23% rebound. So we do think it's overdone at this point. We think markets are counting too much on a quick return to normalcy. Not only, I think we all ourselves seem to understand that it's not going to be quick, but in addition, the markets seem to be ignoring the possibility not only that it doesn't happen quickly, that people are still going to be reticent to go back into shops and so on. But if we do see a rebound in infections, governments are going to have to reimpose restrictions, and that's just going to extend this longer. So it just really does seem to be, to us, too much too soon.
Dan, that's your big downside risk, a second wave of infections. The upside is we work our way to a very gradual reopening and have a vaccine in sight. Talk to me about the symmetry of risk at the moment, the balance of risk for an investor approaching this market, given where price is right now.
Well, I think that's exactly it. We just discussed the downside, which I think could be considerable, even if that kind of very dire scenario of things opening up too quickly and infections rising isn't our base case. But on the other hand, even if we do get this gradual recovery, and if you look at the forecasts that are in the market now for GDP growth, even with the rebound in the third and fourth quarter, you're still down year on year by 4%, which is arguably worse than you had during the global financial crisis. So even there, under the better case scenario, looking out a year to 2 years, it's going to be slow. And particularly where multiples are right now, the market isn't cheap. Now, that's not just looking on, say, 2020 earnings. We all know that a price to a 2020 EPS doesn't have much meaning. But if you look out 2 years, if you look out price to book, markets aren't particularly attractively valued right now. So I think the upside is limited, even if that's a higher probability case. And on the other hand, a low probability of a bigger sell-off at this point, or at least a reset.
All right, Dan, this is a time of little conviction we see as a lot of companies withdraw guidance. But what is your highest conviction call? Is there one?
Well, I heard you discussing, I was able to hear you discussing technology and the concerns about its performance and its weight in the index. But I think there is an interesting comparison to similar discussions we had back in 2007 and 2008 when, of course, financial sector was so dominant in the index and people, then pointed that this was concern and this was risk. I think the difference is, back then, in retrospect, it's easy enough to say that financials were inflated because of cheap credit and the housing bubble. I think the difference now is that a lot of tech's profits are coming at the expense of other sectors, which is different than what you had during the run-up to the global financial crisis. So, yes, tech share is bigger. I don't know if that is inherently as big of a risk as it seemed to be in the past, because what tech is gaining, other sectors are losing. So you might worry more about the potential for the broad market, given that tech is eating the profits of a lot of other sectors, but not necessarily about worries in tech per se. So we are optimistic on the outlook for technology.
Hey, Dan. Always great to catch up with you. I hope you're doing well at home. Dan Morris there of BNP Paribas. We appreciate your patience with the technical difficulties just a couple of moments ago. Let's get back on track, shall we, and get you some news, some headlines worldwide. We can do that with Michael Barr.
Thank you very much, John. Lisa, Tom, President Trump says he will unveil guidelines to relax stay-at-home rules today, citing signs that the coronavirus outbreak is plateauing in parts of the country. President Trump was pressed on reports that business leaders have told him that testing needs to ramp up before Americans go back to work, echoing his health officials. Trump says he also wants widespread testing, but says it's up to the nation's governors.
We're not going to be running a parking lot in Arkansas. We're not going to be running a parking lot where you have a Walmart, which has been great, by the way. Walmart has done a fantastic job, but where you have a testing center and running that from Washington, D.C. The states are much better equipped to do it.
New York Governor Andrew Cuomo says state residents will be required to wear face coverings when they are out and coming in close contact with other people. New York City Mayor Bill de Blasio says it's unfortunate we have a long way to go before we can begin thinking about large crowds.
Everyone should recognize that those big events should be one of the last things that we bring back online. So I got to see in my city real steady progress, even to start to think about relaxing some of those social distancing standards, even a little bit.
The head of the World Health Organization says he regrets President Trump's decision to pull funding for the agency, but that now is the time for the world to unite in its fight against the coronavirus. Trump's move prompted condemnation from world leaders as global coronavirus infections passed the 2 million mark. Global news 24 hours a day on air and on Quick Take by Bloomberg, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Michael Barr. This is Bloomberg, John.
Michael Barr, sir, thank you. Thank you very much for the news and the headlines from New York City with Michael Barr there. Here's your price action this Thursday morning. We are 1 hour and 17 minutes away from the opening bell in New York City, with equity futures up 6 points, positive 0.2%. Some economic data in America, 8:30 Eastern, right here on Bloomberg Radio.
Asset managers who seize change to launch new strategies, add distribution channels, or exploit new technology to re-engineer the investor experience are often rewarded. However, in an industry paralyzed with complexity, few act with agility or decisively. Few run their business strategically. Yet, the most competitive managers in the market know, with the right partner and a flexible operating platform, you can. Go boldly toward change with SEI Investment Manager Services.
I'm Steve Meyer, president of SEI's Investment Manager Services. At SEI, we understand the emerging forces that will define success for asset managers and what firms will need to compete tomorrow. That's why we continually optimize SEI's global operating platform. If your business requires greater agility, our advanced technology, integrated best-in-class systems, and multi-asset expertise can be your catalyst for business transformation.
With SEI Investment Manager Services, you lead the charge in a competitive marketplace. Learn more at SEIC.com/seize change.
Business is constantly evolving. Is your financial printer evolving to keep ahead of the curve? At Command Financial, we are redefining financial printing by providing industry-leading expertise, leveraging technology, and honing processes and best practices. Every day, Command helps SEC registrants, as well as members of their working groups, including securities attorneys and investment bankers, prepare, file, and disseminate regulatory and disclosure documents, such as registration statements, M&A documents, and mutual fund prospectuses and reports. Command provides a full range of services to help you effectively complete your deal, meet your disclosure requirements, and achieve your shareholder communications objectives. Visit our website at commandfinancial.com and learn how we're evolving, not only with the times, but also with your business requirements. Command Financial, redefining financial printing.
Influential
This is a message from the government. Coronavirus is a national emergency, life-threatening for people of all ages everywhere in the UK. To help save lives, you must stay home. Only go outside for food, health reasons, daily exercise, or to work, but only if you cannot work from home. Stay home. Anyone can get it, and anyone can spread it. Stay home to help protect the NHS and frontline staff working to save lives. Coronavirus. Stay home, protect the NHS, save lives.
Thank you.
Thank you.
Thank you.
Thank you.
Thank you.
Thanks to national lottery players, communities across the country are about to benefit from up to £300 million of funding.
Thank you. Thank you.
Money that will help support the most vulnerable in these exceptional times.
Thank you.
Thank you. Food banks, local health organisations, charities combating loneliness, and thousands of other community causes will all get vital resources. Thank you.
Thank you.
And it's all thanks to you, playing the National Lottery. Your numbers make amazing happen.
News 24 hours a day at Bloomberg.com, the Bloomberg Business app, and on Quick Take by Bloomberg. This is a Bloomberg Business Flash.
And I'm Karen Moscow. We continue to watch shares of Morgan Stanley down 1.6% in early trading after the bank reported wealth management net revenue of $4 billion, missing analyst estimates. Abbott Labs is up 1.1%. Its profit beat. Right now, futures are a little changed. S&P futures up 1 point, Dow futures down 18, NASDAQ futures up 35. The DAX in Germany's up 0.8%. 10-year Treasury up 5/32, yield 0.61%. Yield on the 2-year 0.20%. NYMEX crude oil up 1.5% or 29 cents at $20.16 a barrel. COMEX gold up 1.6% or $26.90 at $17.67 an ounce. The euro 1.0889 against the dollar. British pound 1.2497, and the yen is at 107.54. And that's a Bloomberg Business Flash. Tom, John, and Lisa.
Karen, thank you very much. Here's the situation at the moment. It's an ugly situation for global healthcare, but as signs emerge that the health crisis is stabilizing, and as we continue to get ugly economic data like we will in 12 minutes' time, there will be more pressure on governments to reopen or lay out plans to do so. And today, Tom, the focus will be on the president's own plan after he said he'll unveil guidelines to relax these stay-at-home rules.
He's going to have his plan, John, but you have to have money in the piggy bank to adapt a plan or to affect or do a plan. Henrietta Trez joins with Veda Partners. I can't keep track, Henrietta, of the alphabet soup, but one big small business pot has already been used up. Is anybody in Washington aware that as a percent of GDP, they're a third or maybe halfway to where they're going to go?
It's interesting. I think that they are aware of that, but they are slowly becoming more comfortable with making it take as long as possible to get each of these stimulus bills out. So the complicated way of saying they get it, and they know that there's more stimulus coming, a fourth bill, a fifth bill, a sixth bill. But I've been tracking the duration of time it takes them to agree to these pieces of legislation, the first 3 and now 3.5, which hopefully we'll get by the end of this weekend. And it keeps taking them just a little bit longer each time. So they're comfortable with the spending, but they're getting more dug in politically about what points they want to make, whether they sense any kind of urgency. It's almost like they know it's coming, so they're willing to take it slow.
Do you sense urgency at the moment?
I don't sense urgency right now, no. And I think that Treasury Secretary Mnuchin tried to create some urgency starting last Wednesday, and now here we are more than a week later, and we still don't even have this urgent stimulus 3.5 bill. I think Republicans are trying to make a political point in the Senate, and Democrats still are the minority in the House. So eventually you're going to have bipartisan conversation, and they're just not doing that at this time, despite the urgent calls from Treasury. So ultimately, we'll get this money spent. I think the 3.5 bill will be about $500 billion. And then the fourth stimulus bill could easily get you into the $1.5 to $2 trillion package. They're seeing this macro data come in. They know it's a horror show out there, and there are still political games being played. And that gives you a sense that they know it's coming, but it's not urgent.
Henrietta, that's shocking to me that in 9 minutes' time we'll have another ugly jobless claims print. And for someone like yourself who has to read the room in Washington and you don't sense urgency, I mean, how disappointing is that in a moment like this that you don't sense that at all?
It's really painful. It hurts my feelings, if we're being honest. I mean, there are some staff who are deeply entrenched in this and understand the daily goings-on the market, but that is not the norm. And you also have the problem of having these members spread across the nation. So they're not physically in D.C., capable of generating all kinds of momentum for passing any specific legislation. So I think we're seeing that really play out. And while the president keeps holding these daily press briefings, it's almost like no one can get a word in edgewise because he sort of sucks the oxygen out of the room, so nobody's able to make their individual political points, even if they wanted to.
Let's dig a little bit deeper into the urgency of this. We've seen figures that 90% of the Small Business Administration lending facility has been already extended. It has not been delivered yet. The cash not necessarily in the hands of the businesses, but promised out. Now there's another wave of funding being requested from even smaller businesses. How urgent is it that Congress re-ups the amount of money to this program in order to stave off another round of bankruptcies?
I think that's exactly the question. We don't have any oversight or data about what Treasury is doing, who's getting these loans, how effective it's been at stemming payroll cuts. And I think a lot of members want that information and they want to see it roll out. What the Democrats are trying to do is not necessarily delay the PPP from being replenished, but they want to steer the funding into specific baskets, which members like Marco Rubio have an issue with. So, for instance, if you can't oversee exactly who's getting these loans and you don't know if it's really reaching the hands of the folks who need it, what you can do is you can streamline and say, all right, we want $150 billion of this money directly to go to businesses with fewer than 500 people in specific locations, minority-owned, women-owned, kind of try to direct it in that regard. And that's what Democrats have tried to put into their pieces of legislation. But the Republicans are essentially saying, look, we just need to get this money out there. We don't have time for these games. Let's just put the money in this basket and get it spent. So it's a competing view of how to control where this money is delivered and how effectively it's used. And when you see the Fed and Treasury just saying, hey, we're just trying to shovel money out the door right now, it's really difficult to exert oversight in a specific time of crisis. That should really come later, and it will.
Is there more urgency with respect to coming up with a plan to reopen the economy?
The plan to reopen the economy is really just a mess, if we're being honest. There is a really haphazard effort going on at the administration level and almost nothing in that vein going on in either the House or the Senate. Obviously, we have some select governors who are in states who've been deeply hit and are trying to coordinate amongst each other to try to bring their states out of this shutdown. But the administration is creating a situation where people have different senses of different dates. So May 1st is a thing. May 7th is a thing. June 1st is a thing. There's no cohesion. And the, quote unquote, opening our city council that the administration has been, sort of dangling in front of us has no members. It has no concrete plan. It is not unified. And most importantly, it has nothing to do with providing testing to the extent that we need it. No state has been able to test more than 2.7% of its population. That's just not going to cut it. If you're President Trump and you can walk down Fifth Avenue and shoot somebody, that's different.
Henrietta, that's a statistic of the day. Thank you for bringing us that wisdom of under 3% testing right now. Certainly that's what everyone's talking about this Thursday morning. Henrietta Trace with Veda Partners. John, 4 minutes away from a number. I'll be honest, and I take no joy in this, but I just can't. As you say, on processing, it's just got to be up against that constraint of how many can they do in 1 week.
The median estimate, 5.5 million. Initial jobless claims, 4.5 minutes away with full coverage right here on Bloomberg Radio. Alongside Tom Keene, I'm Jonathan Ferro, together with Lisa Abramowitz. You are listening to Bloomberg Surveillance, live on Bloomberg Radio, with the equity markets set up as follows. Equity futures, positive 2 points on the S&P 500. This is Bloomberg.
Elite advisory firms rely on BNY Mellon's Pershing to meet the needs of their most complex clients. Karen Novak, Chief Operating Officer at Pershing Advisor Solutions, explains how.
At BNY Mellon's Pershing, we bring customized insights and strategies to help you grow your advisory business and stay on the leading edge. We can support the needs of your most sophisticated clients with a full range of investment and wealth management solutions, from access to private banking to consolidated bank and brokerage custody. Learn why so many of the largest advisory firms turn to us for the financial strength and high-touch service that BNY Mellon's Pershing can provide. Are you well positioned to stand out from your competition?
Learn more at Pershing.com or call 800-445-4467. Brokerage custody provided by Pershing LLC and other services provided by Pershing Advisor Solutions LLC. Both members of FINRA and SIPC. Private banking and bank custody provided by BNY Mellon NA. Member FDIC.
Message and data rates may apply. T&C and privacy terms can be found at babbel.com/terms. Please don't text and drive.
Have you wanted to speak a new language, but you thought it'd be too hard or take too much time? Then try Babbel for free by texting EXPLORE to 64,000. In just 15 minutes a day, you'll be on your way to speaking a new language in just a few weeks. And right now, you can try Babbel for free. Babbel starts out teaching you words and phrases by matching them with pictures. You won't believe how easy the interactive program is. Soon the sentences get a little bigger, and before you know it, you're having simulated conversations voiced by native speakers. And because Babbel is crafted by language experts and uses the spaced repetition method, in just 10 to 15 minutes a day, you'll be speaking the language of your choice with real confidence. With Babbel, you can speak a language. Just text EXPLORE to 64,000 and start your first lesson in the language of your choice for free. Download the Babbel app or text EXPLORE to 64,000 and try it for free. Text EXPLORE to 64,000.
This is Okay, people, I've got the daily checklist. Who today has eaten dinner for breakfast? Tick. Started a chore you'll never finish? Tick. Done a conference call in your pajamas? Tick. Here's another for your list. BritBox. Streaming the BBC, ITV, Channel 5, and now Channel 4. All in one place and ad-free. So add BritBox to your list and get a 30-day free trial of the biggest box of British box sets. Search BritBox free trial. Tick. Biggest compared to other SVOD providers. Auto-renews at $5.99 a month unless cancelled. T's and C's apply.
This is a message from the government. Coronavirus is a national emergency. life-threatening for people of all ages everywhere in the UK. To help save lives, you must stay home. Only go outside for food, health reasons, daily exercise, or to work, but only if you cannot work from home. Stay home. Anyone can get it, and anyone can spread it. Stay home to help protect the NHS and frontline staff working to save lives. Coronavirus. Stay home, protect the NHS, save lives.
When we're stuck indoors all day, we might find our energy bills creeping up uninvited. The cheeky rascals. And none of us need that right now. But by simply switching your energy with Money Supermarket, you could save £280 on your bills. It's just one small step towards money calm. Money Supermarket.
Right now, TalkTalk TV and Faster Fibre is just £25.50 a month, fixed for 18 months. Plus, you get a year of Amazon Prime on us. Over 80 Freeview channels, all the on-demand players, and average speeds of 38 megabits per second. Plus, unlimited one-day delivery, thousands of movies, TV shows, and more from Amazon. Massive entertainment package, tiny price. See if more to spend on popcorn? Search TalkTalk TV. TalkTalk, for everyone. Offer ends 22nd of April, subject to availability. T's and C's apply.
Broadcasting live from the Bloomberg Interactive Brokers Studio in New York. Bloomberg 1130 to Washington, D.C. Bloomberg 99.1 to Boston. Bloomberg 106.1 to San Francisco. Bloomberg 960 to the country. Sirius XM Channel 119 and around the globe. The Bloomberg Business app and BloombergRadio.com. This is Bloomberg Surveillance.
From New York City, this is Bloomberg Surveillance. For our audience worldwide, we're live on Bloomberg Radio. Let's get you that economic data. It's Vinny, down your dice.
Yes, it's the great lockdown. More jobless claims. More than 5.2 million last week. 5.2 million jobless claims last week. Continuing claims, which the government counts people that are getting checks. 12 million. So we've seen, though, as far as initial claims, almost 20 million in the past few weeks, since the end of March. Now, many people are broke or close to it. Businesses shuttered, in doubt. But this is a pandemic, and as we've seen, it carries a greater toll, lives lost. Now, check this out from a newspaper in Casper, Wyoming, the Star Tribune. Economists at the University of Wyoming estimate the economic benefits of lives saved through social distancing outweigh projected U.S. GDP losses by $5 trillion. And they also say social distancing will help prevent more than 1 million deaths. So again, jobless claims coming in last week at breathtaking, more than 5.2 million. I'm Vinny Del Giudice, Bloomberg Radio. Let's go back to New York.
Vinny, thank you very much. I believe over the last 4 weeks, that puts us just north of 22 million jobless claims in just 4 weeks. Absolutely unbelievable numbers from an unprecedented economic shutdown, Tom.
Yeah, absolutely. You take 22 million, John. Thank you for coming up with that number. I'm going to go to the famed HP12C calculator. It's the official surveillance calculator. And I'm going to go 22 divided by 155, and that gets you to 14.2% of the employed labor force is really struggling, and I would guess that's underplayed right now, and we have to get the next Thursday as well. Michelle Meyer with us with Bank of America. Michelle, I guess I did math there. I don't know if it's Bank of America quality, but I took 22 million divided by 155 million employed. That's really ugly. How do you fold that into a guesstimate of where the unemployment rate will head?
Good morning, Tom. Good morning, John. So, yes, absolutely. Those are disturbing numbers, and your math is correct. It's about 14% of the labor force that have already lost jobs in an extremely short order amount of time. So the unemployment rate is already in double digits. It's with these numbers, if you assume one-to-one translation to the household survey from the BLS, which is probably not quite right. Probably there's some wiggle room there, but it would suggest you're probably already at about a 14%, 15% unemployment rate.
What do you think it's going to eventually end up being, given the pace that we're seeing, given the lack of clarity as far as the ability to process these claims versus the demand for unemployment benefits right now?
So, the bulk of the loss is happening right now. I mean, that's what this recession looks like. It's an acute crisis. It's a shutting down of parts of the economy. It all happens very, very suddenly. So, we certainly should assume some moderation going forward. I don't think we've returned to anything that, was kind of pre-COVID levels for a really long time when it comes to claims. They will remain elevated, but they'll come off of these extraordinary levels of 5-6 million a week. Nonetheless, April jobs report will be clearly very ugly with what we're seeing. Millions of jobs lost. May will probably also be very weak because you have some residual weakness there. Companies that had tried to stay along, but at some point kind of decided the math doesn't make sense anymore, and their employees would probably be better if they do go on unemployment insurance. So, there's some laggers there as well, and I do think that it's going to take some time to work through all of that.
Michelle, in 4 weeks, we've taken out 10 years of jobs growth in just 4 weeks. And quite clearly, it's easier, quicker to get rid of jobs than it is to add them. Have you got any projections whatsoever at this point about how long it's going to take to heal these wounds that are deep into this labour market in just 4 weeks?
You're absolutely right. It's a lot easier to shut the light switch off than put it back on, especially in this environment where, it's a dramatic, quick shutdown, a lockdown from the shelter-at-home orders, and then it's going to be a very slow and probably partial reopening. So the one thing to look at when you talk about the job cuts is the percent that are reportedly considered temporarily unemployed. The estimates I've seen suggest that about half of the current flow into unemployed are considered temp. So if that is the case, those workers, in theory, should be more attached to their employers, and they should be able to have a clearer trajectory as to when they'll be hired back and what that might look like. So you'll see an initial, once we go to the point where companies can start opening, businesses can start coming back, even partially, that will bring their workforce back to some extent. Where it gets really sticky and where you see the frictions is that next phase. So you bring back your essential workers, and then what comes next? It's going to be very slow because we need to see revenues improve.
Your rise in claim, folks, with us, Michelle Meyer, Bank of America, this morning. Your rise to economic acclaim, Michelle, was founded on the housing market. I'm dying to ask you this. Give us the Michelle Meyer dynamic, housing sales dynamic, housing build dynamic. If you had to write a 3-page essay right now on housing amid this unemployment rate, how would you frame it?
Housing is under stress, very simply. Housing is a sector that's heavily debt financed. So, it's reliant on the ability to get leverage and the willingness to spend that debt. Both, I would argue, are challenged right now from the household and from the builder perspective, small builders. And it also is a sector that requires quite a lot of confidence to go out and to purchase a new property, to spend the money and the time and the effort in terms of making that the home of your dreams. That all requires having confidence about your current and future income. And I would argue that that's certainly not the case today either. So you're going to see quite a big drop in housing activity.
Then what's the elasticity of rent or house price? I mean, do we finally get, we're addicted to housing always going up. Yeah, right, we learned in 2007 that doesn't work. But should we anticipate now flatness or even declining cost of us living in rent or homes?
So, first I'll take on rents. I mean, on either rents or housing prices, they tend to be sticky, so they don't adjust immediately. You first have to see transactions adjust lower. You find a market clearing price, and then you see the price data actually adjust. So, but what's interesting on the rent side is that you could see, in theory, landlords across the board say, look, we're going to give a reduction in rent very quickly given the unprecedented nature of this shock. You've seen a number of MSAs try to push for mandated, rent reductions, at least for a period of time, to ease the burden on individuals. So it depends. I mean, I think given the unprecedented nature of the shock, you could see a faster reduction, perhaps, in the cost of living, given how much income has been reduced. But typically, rent and home prices tend to lag. You first need to see the move in terms of transactions, and then you see it in terms of the price variable.
Michelle, there's a lot of people really struggling in this moment. You know that. Everybody listening in this very moment knows that. And I'm just wondering if there's anything else we can do on the policy side to help out. Is there anything left?
I do think that there's more that probably will be done. I mean, the response has been aggressive. It's been targeted. But there are naturally, some frictions. The clock is ticking, particularly when it comes to small and medium businesses who are forced to cut workers, as we're seeing this morning. So the quicker that funds can be distributed, the better. Now, it's a really hard thing to do, is to turn around and all of a sudden get all the money to where it needs to go in the private sector. It's not an easy task, and naturally there's going to be some operational challenges and issues there, which is what looks to be happening to some extent. But I suspect we will see additional funds be allocated. There likely will be another round of stimulus, probably in pretty short order, targeting small and medium-sized businesses and trying to create the right incentives to keep their workers on the books.
Michelle, these numbers are brutal. They're really, really depressing to see this scope of Americans lose their jobs, and frankly, people worldwide lose their jobs. And yet we're looking at S&P futures that are up 0.5%. They actually climbed after this data came out. Can you look to any positive economic developments that could be edifying the sort of positive sentiment that we're seeing bleed out in stocks today?
So there's always a question of what's priced in, and I think, presumably very weak data has been priced in, right? There's an awareness that with the shutdowns being enforced, you're going to see these level sets down in the data, which is exactly what's coming through. But no, obviously the data on the headline is absolutely stunning in terms of its degree of weakness. The other thing probably driving markets presumably is what we just talked about around stimulus. How much of an offset will there be? There seems to be a large willingness from the policy side to try to counter the weakness in the private economy and try to offset the shock from the COVID pandemic. So, I would imagine investors are also paying very close attention to that as well, the degree of stimulus and how that bleeds into the broader economy.
Michelle, great to get your thoughts, as always. Michelle Meyer there of Bank of America weighing in. Almost embarrassing to buy equity futures off the back of some of these numbers. Equity futures right now at 14, positive 0.5%. A little bit more on that a little bit later. Let's get some news, some headlines worldwide. We did that from New York with Michael Barr.
Thank you very much, John. Lisa, Tom, new guidelines are expected soon from President Trump aimed at easing restrictions in areas with low transmission of the coronavirus. Current social distancing guidelines would remain in place for harder-hit states, but business leaders are telling President Trump they need more coronavirus testing and personal protective equipment before people can safely go back to work. Oregon Governor Kate Brown says that they have begun pushing for other state lawmakers and the Trump administration to consider other methods of voting this November. Brown slammed states who have continued to require in-person voting during the pandemic.
I'm gravely concerned about what I've seen in other states, particularly Wisconsin this last week, where voters literally had to put their lives on the line in order to have their voice be heard.
Prime Minister Justin Trudeau says now is not the time to loosen Canada's lockdown restrictions.
It will be weeks more before we can seriously consider loosening the restrictions. It would be terrible if we were to release restrictions too early and find out that we're suddenly back in another big wave of COVID-19 and everything we've gone through up to now would have been for nothing.
His remarks are the strongest yet against loosening economic restrictions too soon. Canada has more than 27,500 confirmed cases, including 954 deaths. Global news 24 hours a day on air and on Quick Take by Bloomberg, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Michael Barr. This is Bloomberg. John.
Michael, thank you, sir. Thank you very much. And maybe not as bad as thought situation in the equity market right now, Tom. for me, I don't know how you can really draw that conclusion at the moment, because there's clearly limitations to processing some of these jobless claims. So when we get numbers like 5.5 million, 6 million, are we getting that because that's the number that's applied for claims, or are we getting that because that's just how many they could process in a given week? Which is why I don't see how this can be a trading queue in a market like the one we're in an environment like the one we're in.
No, as Michelle Meyer said, I think that you have to take the sum total, 22 million, and I've seen John publish views of guesstimates of 30 million. I don't know what it's going to be, but by no means, John, do I think we're at any ebb here or ending of it as well. John, I want to point out two things. 30-year yield has really come in 1.24%. It's not like headline making, but it's come in with a vengeance. But what has slipped my attention, I failed at this, folks. Lisa emailed me, you failed, Tom. I did. Euro Swissy. Swissy is to new strength, John, back to 2015. To me, that is a huge signal of attentions, and maybe is even linked to Lagarde's swap announcements today.
Almost back to parity on Euro Swiss, and a Swissy gaining every day this week against the euro so far. From New York, this is Bloomberg.
This is your Bloomberg Real Estate Report. I'm Denise Pellegrini. Almost 4% of mortgage borrowers have already stopped making their payments as the COVID-19 pandemic rages. And Prashant Gopal, reporter for Bloomberg News, says the percentage is even higher among those seen as the riskiest borrowers.
You know, many of those first-time buyers getting FHA mortgages or VA mortgages, which are for veterans, and those loans, you know, if you look at that, it's almost, I think almost 6% of those loans are in forbearance.
This is tough on mortgage servicers as well. They have to pay investors even if borrowers don't pay up.
For the mortgage servicers, it is a nightmare.
And ultimately also tough for Ginnie Mae, which backed many of these loans. And Gopal also says the government isn't requiring mortgage holders to prove COVID-19 hardship. And,
there are a lot of people who don't need help. They don't need forbearance, but they're trying to get it anyway.
And that's your Bloomberg Real Estate Report. I'm Denise Pellegrini.
Hey, y'all, Jeff Foxworthy here. Now, if you've ever found yourself repeating the same thing over and over for 75 years, you might be Smokey Bear.
Only you can prevent wildfires.
That's why I'm filling in for Smokey to switch things up, because there's a lot more to say. And I should know because my grandfather was a firefighter. And one of the things he taught me is that the people that love the outdoors the most are often the ones accidentally starting wildfires, which means always BYOB. No, bring your own bucket to the campfire. And be extra careful with things like burning yard trimmings. Don't just walk away, or chances are you might be starting a wildfire. So for the love of the outdoors, go to SmokeyBear.com to learn more about wildfire prevention. Brought to you by the U.S. Forest Service, your state forester, and the Ad Council.
Connecting decision makers.
When we're stuck indoors all day, we might find our energy bills creeping up uninvited. The cheeky rascals. And none of us need that right now. But by simply switching your energy with Money Supermarket, you could save £280 on your bills. It's just one small step towards money calm. Money Supermarket.
TuneIn makes it easy to be a part of the conversation. Just make sure push notifications are enabled to hear about breaking news and trending topics from around the sports world. You'll also get custom recommendations of podcasts and radio stations covering the sports and teams you care about. The sports world is full of inspirational stories of heroic figures. It also has its fair share of shady characters. For detailed retellings of the darkest sagas in sports, explore TuneIn's documentary podcasts, like 30 for 30's The Sterling Affairs, about the scandalous life and times of the former Clippers owner, Donald Sterling, and Gladiator, which follows Aaron Hernandez's transformation from Super Bowl star to convicted murderer. For these and more, search sports documentaries on the TuneIn app. 24 hours a day at Bloomberg.com, the Bloomberg Business app, and on Quick Take by by Bloomberg. This is a Bloomberg Business Flash.
And I'm Karen Moscow. The number of Americans applying for unemployment benefits fell last week to a still massive 5.25 million, capping 4 weeks of coronavirus-related shutdowns that erased more than 10 years of job creation. Meanwhile, new U.S. home construction declined in March from the previous month by the most since 1984 as the pandemic started to take a bigger toll on the housing market and broader economy. Residential starts decreased 22.3% to an 8-month low of 1.22 million annualized rate. Also, ConocoPhillips will voluntarily cut oil production as the worst crude price crash in a generation threatens to fill storage to the brim, forcing drillers to scale back. S&P futures higher, up 14 points. Dow futures up 75. NASDAQ futures up 76. The DAX in Germany up 1.1%. 10-year Treasury up 6/32. Yield 0.61%. Yield on the 2-year 0.19%. Make that. NYMEX crude oil is up 1.6% or 31 cents at $20.18 a barrel. COMEX gold is up 1% or $16.70 at $17.56.90 an ounce. The euro 1.0886 against the dollar, and the yen 107.51. And that's a Bloomberg Business Flash. Tom and Lisa.
Karen, thanks so much. Bloomberg Surveillance this morning brought to you by Cohn Resnick, Advisory Assurance Tax, for ideas to stabilize your business and find opportunity amid uncertainty. Visit the Cohn Resnick Coronavirus Resource Center at cohnresnick.com/COVID-19. That's the cohnresnick.com/COVID-19 Corona Resource Center. We thank Cohn Resnick as always for their support. Lisa Bramowitz and Tom Keene Truger with us. As Lisa said, really a horrific set of reports there. And I know Karen Moscow talking about grim housing dynamics as well. With us now, Peter Hooper of Deutsche Bank. And here's the secret, folks. Someone like Peter Hooper, with his esteem and all of his efforts with the IMF and other institutions over the years, including his Deutsche Bank, gets to work with Matthew Lazzetti and Torsten Slok because they're writing 20-page reports that drill down into the minutia of these dynamics. Peter Hooper, when you look at jobless claims, go beneath the headline data of 5 million. What does Matt Lazzetti see? What's the dynamic Deutsche Bank sees in claims that we need to know about?
Tom, when you add today's report, of course, to what's happened in recent weeks, we're looking at something approaching 27 to 30 million people unemployed in the month of April. This is unemployment rate in the 17 to 20% range. It's not quite the Great Depression, and we can thank the Fed an awful lot, that Fed and Congress for some of their actions there. But these numbers are extreme, and no question. There's an awful lot of pain being felt out there.
Peter, I want to talk about the connection between psychology and economics here. The idea that millions upon millions of Americans are losing their jobs, having their safety nets withdrawn from them in a second, in a heartbeat, a decade of jobs lost. What does that do on a longer lasting scale in terms of the savings rate, in terms of the job turnover rate, and in terms of wages going forward?
Well, Lisa, no question there are going to be some lasting scars from this. We're all wrestling with what's causing it in the first place, the coronavirus, and how is that going to play out here? Is this going to be a very short, very sharp, but brief downturn? Is it going to be something more lasting? I think we've never seen anything quite with this speed. And clearly, it has shocked many people. We're obviously our behavior patterns have changed drastically. In terms of the lasting psychological effect, there are obviously risks there. But this is also why it's so critically important to get these programs that are underway. The small business lending, keeping these businesses afloat, beginning to get some of these people who have lost their jobs back on the payroll. Yes, we've seen a lot of money go out, be committed, but the fund has not started to flow yet significantly. We need to see money actually in the hands of small businesses, get people back into at least getting on the payroll and getting relationships reestablished there.
But then, Peter, whether it is small business or it is individual checks with the president's signature, I believe, on them, those are going out now, even yesterday. I believe I heard anecdotally some people receive checks. Great. Are you implying that within this policy, it's just income substitution that's emergent right now?
Well, what we're trying to do is buy some time, okay, for the coronavirus to begin to play out, and we're hoping that the epidemic curves that we're looking at will be realized. We were hoping that we are at or nearing a peak, and things can begin to decline. And you have to allow people to continue to spend. You have to meet necessary income levels, and you have to, insofar as possible, maintain job relationships. The more we can do that, the easier it's going to be to get things going down the road, right?
Peter Hooper, thank you so much for the summary. Greatly appreciated. He's head of economics for Deutsche Bank, and just greatly thrilled he could be with us today. Lisa, I think what Dr. Hooper said there, for the time being, is there's got to be a time limit here, and if you know there's a time limit, income replacement or income substitution seems like a no-brainer, as we're seeing in many other countries. We're not affecting that here.
Right, and that's sort of the question, if you can give people money to sustain themselves, that they'll be able to recover from this much more easily. I've been looking at a number of studies recently, Tom, that take a look at household balance sheets and the wherewithal of them to withstand a crisis like this heading into this. And it shows that they've been actually deteriorating on an increasing pace heading into this. And I think that that's really important to watch. There was one study looking from the University of Chicago looking at how households were in a deleveraging cycle after 2008, 2009, trying to pay down some of those debts, which left them less capable of saving. So their savings rates are much lower now than they would have otherwise been, which leads to a lack of resilience. I mean, all of these things kind of play into the dynamic right now. And that's why I talk about the psychology of losing your job at a time when you don't have savings, where you don't know where your next paycheck is coming from. It's that much more devastating.
I mean, the word hope comes up here, and folks, is a card. I've said this as speeches every time I give a speech. I say this, Lisa, but if you see the word hope, circle it, because it's a good way of losing money. But within the medicine of this and the trauma, the hope is, as Dr. Hooper said, this ends soon. I don't know if soon's May, soon's July. I don't know when soon is. But if you just replace income out to soon, it seems like everyone will be better. And as Kevin Cirilli said this morning, we're not doing this in Washington. It's just not happening, Lisa.
Yeah, the urgency, the lack thereof, and Henrietta Trace was really talking about that.
Yeah, Henrietta I thought was brilliant. Lisa Bramowitz and Tom Keene, we're thrilled you're with us this morning after a really difficult jobless claims report. Please stay with us another hour of Bloomberg Surveillance.
Did you know that players of People's Postcode Lottery have raised over £500 million for charities and good causes? They've also won £47 million in prizes so far this year, and it could be your postcode next. Visit postcodelottery.co.uk/radio before midnight on the 23rd of April to play in the May draws. PPL managed lotteries on behalf of good causes. 16 plus, conditions apply, play responsibly.
At Asda, we're doing all that we can to keep shelves full and prices low. So you can pick up a 7-pack of Grower Selection bananas or 400 grams of seedless red grapes, both just £1 each. Asda. Save money, live better. Selected stores subject to availability.
This is a message from the government. Coronavirus is a national emergency, life-threatening for people of all ages everywhere in the UK. To help save lives, you must stay home. Only go outside for food, health reasons, daily exercise, or to work, but only if you cannot work from home. Stay home. Anyone can get it, and anyone can spread it. Stay home to help protect the NHS and frontline staff working to save lives. Coronavirus. Stay home, protect the NHS, save lives.
The NFL Draft is on TuneIn.
Starting Thursday, April 23rd, ESPN Radio has you covered with live coverage, discussions, and analysis of every round.
Be there when the future stars of the NFL find their home.
And your team selects the players that will shape their future for seasons to come.
In case you didn't know, TuneIn lets you listen to the same radio stations you pick up on your home or car radio, except you can hear them from anywhere. If you want to find a station from somewhere else in the world, navigate to the By Location section under Browse. Keep exploring with TuneIn.
The Woj Pod with Adrian Wojnarowski.
Doris, you had reason to believe that you needed to get a test for the coronavirus.
Right. Well, let's just start with the headline, which is I did test positive for COVID-19. I was so tired from Saturday the 14th through Tuesday, March 17th. I kid you not, I could not be out of bed for 5 minutes without needing to go back to bed and lay down.
Search the Woj Pod to listen. To help make the most of your time at home, TuneIn is sharing our top activities for social distancing. Tip number 4, relax. Don't feel like you have to be productive during these stressful days? This is the perfect time to focus on yourself. Whether that means meditating, taking a bath, sleeping in, or doing nothing at all, take a deep breath and treat yourself. For more indoor inspiration, search Listen from Home on TuneIn.
Hit the court anytime with these great NBA podcasts on TuneIn. The Low Post.
So what struck you about this potential head-to-head matchup? What did we learn now that Zion is involved and LeBron and Zion go at each other for the first time?
I still think both teams have to figure out kind of who are their guys when they get into a fourth quarter. I think you saw that with both of them. There were some kind of odd moments.
The Ringer NBA Show.
Who ended up winning the thing. But I did watch for a little bit when it was DeAndre Ayton and Zach LaVine playing against each other. And then as the days went on, Devin Booker was involved. Tell me you've seen the clip of Devin Booker when I can't remember who his opponent was.
Or the Haber Show.
At the end, it's because I worked in the NBA in the front office, and when I was 14 years old, my family moved back from Sudan to America. I jumped high school here in New York
Find these and more NBA podcasts right here on TuneIn.
We always talk about the losers in a trade war.
You benefit if you're just further away from China.
So that you can too.
What are the ramifications if she crumbles or doesn't crumble?
Bloomberg Radio, the Bloomberg Business, Radio.com, and iHeartRadio apps, and BloombergRadio.com. Bloomberg, the world is listening. From the financial capital of the world, 24 hours a day at Bloomberg.com, on the Bloomberg Business app, and on Quick Take by Bloomberg. This is Bloomberg Radio. This is Bloomberg Surveillance Economics.
In this cycle, we've dealt with a lot of shocks.
It's important to understand what the Fed can and cannot do.
Finance.
There's no asymmetry left in markets. It truly is a zero-sum game.
We will get slower growth. Let's not get confused about that.
Investment.
Very few investors want to own any energy to begin with.
There's a great deal of uncertainty. People are trying to hide in safe places.
Bloomberg Surveillance with Tom Keene and Paul Sweeney on Bloomberg Radio.
Good morning, everyone. Paul Sweeney and Tom Keene. Thank you for being with us coast to coast. Good early morning, San Francisco, Bloomberg 960, the Bay Area, and here on the eastern seaboard, a beautiful day in New York. Good morning, Bloomberg 1130 in Washington and in Boston. Good morning as well. And a particular good morning on all of our digital product listening from your homes to see Morgan Stanley with a 90% working from home and others at 80% in the financial worlds. And there's people out there working who have to work exposed to this pandemic. But I'll really tell you, folks, it's extraordinary to see these changes. And it's all of us here on Team Surveillance spread out across the tri-state area, trying to do the best we can with a great technical team led by Richard Truman, who's the one who's been really putting this together. Paul Sweeney, grim jobless claims. We knew they were coming, and yet there they are. And the shock is Michelle Meyer of Bank of America said 14% of Americans have lost their jobs.
Yeah, just extraordinary. In just a space of a month, Tom, we've never seen that before. So all of the job gains that we've gotten during this expansion since the Great Recession have been wiped out in the space of a month. And there's also some news, Tom, coming out across the Bloomberg on the global oil space. OPEC has now seized demand for its crude dropping to the lowest in 30 years. And so the demand for OPEC crude will be below 20 million barrels per day in the second quarter. And they haven't pumped that little amount since early 1989. So what we've seen, Tom, in that collapse of oil prices just being confirmed here by OPEC.
It's extraordinary to see, and the demand dynamics have really been something. This is with West Texas, $20.31, Brent crude, $28.52, and I would suggest it's very much in the numbers. But as we heard from Fadi Birol on Bloomberg Surveillance, I believe yesterday, of the IEA, they have become, Paul, completely demand focused. There's just no other way to put it. I've never seen the focus on demand.
No, you're exactly right, Tom. Right. And just the demand globally is just cratering. And at a time when OPEC, we just had for a period of time, we had Saudi Arabia and Russia just pumping all that they could pump in this crazy dynamic in terms of trying to gain market share. So it's just the worst dynamics for global oil. But you're right, Tom. It all comes down to global demand, which is really, really feeling a shock.
Well, it is a shock, and we'll touch on this here in a moment. Right now on the equity markets, right now on individual stocks, and of course, Morgan Stanley, one David Wilson. Good morning, David.
Good morning, Tom. Yeah, Morgan Stanley shares down about 3% in early trading. First quarter revenue at the bank trailed analyst average estimate in a Bloomberg survey. A shortfall in money management outweighed trading and investment banking revenue. The top projection profit also came up short. You are seeing some gains elsewhere in finance, though. Bank of New York Mellon's up 1%. The bank's first quarter earnings rose rather than dropping, as most analysts predicted. Fee revenue climbed 10%, reflecting increases in trading and volatility last month. And you also have BlackRock up 1%, their first quarter profit and revenue beating projections, even though there were net outflows from its long-term funds for the first time in 5 years. You're seeing some movement in medical suppliers. Boston Scientific's up 2%. The medical device maker reached a licensing agreement with a biotechnology company, Sologenics, in connection with vaccines to prevent COVID-19 and pandemic flu. Now, terms of this deal weren't disclosed. Sologenics, the ticker there is SNGX. Smaller company, shares up 56% in early trading. Baxter International is up 0.75%. The healthcare supplier said demand for some products has risen significantly because of the coronavirus pandemic. Baxter says stepping up production of those items and hiring 2,000 workers, including 800 in the U.S. Abbott Labs, though, down 1%. The medical product maker withdrew annual forecasts because of the coronavirus. That's after first quarter earnings, beat estimates, and sales top projections by most in more than a decade. One of the most active stocks in early trading is Mellanox Technologies. It's up about 2%. A proposed $6.8 billion takeover of the chip maker by NVIDIA received conditional approval from Chinese regulators, so that deal is one step closer to going ahead. United Airlines is down 3%. The carrier's top executives told employees that travel demand is essentially zero, I'm quoting there, and is likely to remain depressed into next year. They said further cuts are planned in United's May flight schedule, and similar reductions are coming for June. You look at American's peers, they're lower as well. American off 1.5%, Delta down 1%, Southwest down 0.75%. Looking at ConocoPhillips, and the shares were little changed at the last check. That said, the energy company's reducing oil output by 225,000 barrels a day. It's also seeking to lower costs by $3 billion, and that's on top of $2.2 billion in reductions announced last month. Square is lower by 4%. The payment processor was cut to the equivalent of sell from hold at Raymond James. The firm said the coronavirus pandemic is like, quote, kryptonite for Square because the company's small business activity may take a year or more to recover. Monster Beverage, up 1.5%. The energy drink maker received a buy rating at Bank of America, which reinstated coverage. And Bed Bath & Beyond, talk about a stock that's been beaten up lately, up 15.5%. Fiscal fourth quarter earnings at the home furnishing seller beat estimates. Now, the company did suspend dividends and stock buybacks, cut capital spending, and said would borrow $236 million, yet the shares are higher.
Bloomberg Stocks editor Dave Wilson, thanks so much for that detail. Lots going on in the equity markets as we become accustomed to. So, again, going back to energy, Tom, OPEC, Bloomberg's out with this story. OPEC sees demand for its crude dropping to the lowest in 30 years. I guess that's kind of what we've become accustomed to. Big headlines just showing the shock to the global economy. Anne-Marie Hordern, she covers all things energy for Bloomberg News. She joins us here this morning. Anne-Marie, thanks so much for joining us. Boy, this is, I guess, confirmation of kind of what we've been expecting here. When you take a look at the price of global crude oil, just down to $20 a barrel here in WTI, OPEC just really confirming that the demand is just not there.
Yeah, the supply side really has just been a sideshow. It has all been key focus about demand. And this OPEC report, what it shows is that they see world oil demand contracting by 6.8 million barrels a day. You don't see the market moving lower on this because really yesterday was the big number, and that was the IEA. Tom and Francine were talking to Bati Biro after that really devastating report. That report was projecting a slump of over 9 million barrels a day. That's the most we've ever seen on record. There's serious demand destruction. And the problem is right now is that you have these OPEC plus cuts, but they're a little bit. They're too small. They're not even going to make up what we're seeing on the demand destruction side, even close. And on top of that, they only start in May. So right now, the world is really awash with crude for the remainder of April. And we already see that with some of these big producers giving these discounts to Asia, still looking for market share.
Right. Emery, I want to go to your expertise on Vienna. And I mean the coffee shops of Vienna, the fancy hotels you frequent in Vienna when you go down there in soiree with the cartel. The key story here is in the last paragraph of Grant Smith's report, which is IEA is way grimmer than what we see this morning from OPEC. Tell us the politics of how OPEC had to assuage all their members, particularly Saudi Arabia. Did they make up this statistic? Is it pretend math, or is it actually real numbers?
It's actually real numbers. I think one thing to keep in mind, though, when you're dealing with OPEC, you're dealing with a lot of cheaters as well. So you're dealing with the OPEC might be looking at this, and I believe they are, with perfect compliance. Now, are you going to get perfect compliance out of oil-producing nations? Not really. You might get perfect compliance as an entire group, but now you're adding even more. It's not just a cartel. It's plus. It's Azerbaijan. It's Mexico. It's a number of other countries. And you're probably not going to get 100% compliance out of all of them. The IEA is always a little bit more drastic, I would say, than what you'd see in these OPEC specific numbers. And one thing also to do with that is that IEA really takes a real worldwide view. OPEC does as well. But I would say OPEC is always looking about how much of the world share of oil is coming from OPEC countries. That's what they really care about. And for that, you're seeing this the lowest level since the early 1989.
So, Anne-Marie, it's not just OPEC or OPEC Plus, it's also the United States. What's the policy here? Where do you think the industry is in the United States in terms of production? Do they have to cut production?
Well, I think you're seeing it already this morning with ConocoPhillips voluntarily cutting oil production. Would you really see a U.S. oil company do that? The problem is there's just no choice. You really have no choice. There is now not enough places to put this. The IEA said it yesterday. We're going to exacerbate all of the storage with pipelines, ships, storage tanks by the middle of the year. So what happens? You have shut-in. Refineries aren't running. So regardless if the U.S. decides they want to come out and want to cut production, which we don't have a mechanism the way a lot of these other countries do, you're going to see natural decline anyway.
Emery, thank you so much. Really great. Really nice summary there of this distinction, folks, between IEA and OPEC and a massive crash in demand. One of the elements of this economic contraction. Anne-Marie Hordern in charge of Vienna Coffee for us at the cartel as well. Really great work on petroleum from Anne-Marie and some important interviews, particularly from the Middle East. With our news in New York City, here's Michael Barr.
Tom, Paul, thank you very much. Today, President Trump is expected to release new federal guidelines meant to begin the process of reopening the country. Although the authority lies with the governors, Bloomberg's Martin DeCarroll reports the president insists he could have a say in it.
First, President Trump claimed he had the authority to order states to reopen. Then he backpedaled. Now the president says the federal government can shut states down if they bungle the recovery.
We have the right to do whatever we want, but we wouldn't do that. But no, we would have the right to close down what they're doing if we want to do that. but we don't want to do that. And I don't think there'll be any reason to do that, but we have the right to do that.
Governors are forming coalitions in separate regions to coordinate what will be an incremental return to the normal rhythms of daily life once the nation solves its severe shortage of coronavirus test kits. In Washington, Martin DeCaro, Bloomberg Radio.
Japan's prime minister is planning to expand a state of emergency to the entire country from just Tokyo and other urban areas as the coronavirus continues to spread. In other developments in Asia, China denied allegations that the pandemic originated in a laboratory where contagious samples were stored. President Trump threatened to try to force both houses of Congress to adjourn, the unprecedented move that would likely raise a constitutional challenge so that he can make appointments to government jobs without Senate approval. President Trump complained that Senate Democrats had prevented him from filling important jobs that will become even more necessary as the country tries to recover from the coronavirus pandemic. Global news 24 hours a day on air and on Quick Take by Bloomberg, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Michael Barr. This is Bloomberg Poll.
Thank you so much, Michael. So, Tom, just looking at those jobless numbers coming out today, when you think about it, just extraordinary. Now, we are seeing a decline week to week, but the numbers, the absolute numbers, Tom, are just extraordinary. And the question I have is going to be the duration here. And it kind of comes back to that question. Is this economy... I think people have kind of discounted the V recovery, and now it's something longer. Is it a U? Is it an L?
Well,
but boy, you see these data just mounting up day to day, and it's not going to be over soon, it appears.
Let me partition this, Paul, very quickly. The equity markets are up, but there's some other signs. 30-year yield is in, and I'm really watching Euro Swiss franc, stronger Swiss franc over the last 3 days.
Yeah, exactly right, Tom. And we'll get a summary here on the energy we've been talking about, crude oil. WTI crude, $20.18 a barrel. That's up just slightly. We'll have more on that coming. This is Bloomberg.
Business is constantly evolving. Is your financial printer evolving to keep ahead of the curve? At Command Financial, we are redefining financial printing by providing industry-leading expertise, leveraging technology, and honing processes and best practices. Every day, Command helps SEC registrants, as well as members of their working groups, including securities attorneys and investment bankers, prepare, file, and disseminate regulatory and disclosure documents, such as registration statements, M&A documents, and mutual fund prospectuses and reports. Command provides a full range of services to help you effectively complete your deal, meet your disclosure requirements, and achieve your shareholder communications objectives. Visit our website at commandfinancial.com and learn how we're evolving, not only with the times, but also with your business requirements. Command Financial, redefining financial printing.
Imagine being denied an apartment because of your religion, or your race, or because you have children, or a disability.
It's so wrong. Yes, but who has the power to stop this?
You do. Each of us has the power. The law is on your side. It's illegal for landlords to discriminate because of race, color, religion, sex, national origin, disability, or familial status. If you suspect that you have experienced housing discrimination, file a complaint with HUD immediately so we can investigate it. Fair housing is your right.
Use it.
To learn more, visit HUD.gov/fairhousing. That's HUD.gov/fairhousing. Or call 1-800-669-9777. 1-800-669-9777. A public service message from HUD in partnership with the National Fair Housing Alliance.
Influential conversations from...
This is a message from the government. Coronavirus is a national emergency, life-threatening for people of all ages everywhere in the UK. To help save lives, you must stay home. Only go outside for food, health reasons, daily exercise, or to work, but only if you cannot work from home. Stay home. Anyone can get it, and anyone can spread it. Stay home to help protect the NHS and frontline staff working to save lives. Coronavirus. Stay home, protect the NHS, Save lives.
In case you didn't know, TuneIn lets you listen to the same radio stations you pick up on your home or car radio, except you can hear them from anywhere. If you want to find a station from somewhere else in the world, navigate to the By Location section under Browse. Keep exploring with TuneIn.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and on Quick Take by Bloomberg. This is a Bloomberg Business Flash.
And I'm Karen Moscow. U.S. stock index futures are rising. The dollar trimming a gain as investors digest a fresh batch of company earnings and data showing a slightly smaller than expected surge in unemployment. European stocks advancing alongside oil. We check the markets every 15 minutes throughout the trading day on Bloomberg. S&P futures up 17 points. Dow futures up 109. NASDAQ futures up 96. The DAX in Germany is up 1.1%. 10-year Treasury up 7/30 seconds. Yield 0.60%. The yield on the 2-year 0.19%. NYMEX crude oil is up 1.3% or 26 cents at $20.12 a barrel. COMEX gold is up 0.7% or $12.80 at $17.53 an ounce. The euro 1.0878 against the dollar. The yen is at 107.56. And that's a Bloomberg Business Flash. Tom and Paul.
Karen, thanks so much. Paul, the dynamics in the yield market are extraordinary. 30-year bond from a 1.24 well in almost to a 1.22. 2-year yield lower as well.
Yep.
And where it really confirms, Paul, over the last 10 days is the persistent strength of the Swiss franc. I know for our American audience, this is way outside baseball. Euro Swissy 1.0513, a 104 print on Euro Swiss. Paul, a strong Swiss franc. That would be extraordinary signal of global economic contraction.
Absolutely, Tom. I mean, you take a look at the safe haven currencies. The dollar index still strong once again today.
Yeah.
Again, calling out the Swiss versus the euro. Very interesting here. So it just goes to this global sense that there is obviously we're in this thing for a certain period of time, probably longer than initially thought.
Philippine peso turning around with rate cuts a little bit weaker today. I noticed Turkish lira weaker as well. Maybe in Damian Sassauer is joining us later. We'll see Mexican peso back up above 24. So there's I really want to emphasize, folks, there's some real dynamics out there right now. On this pandemic, we have been thrilled by our medical coverage. We really try to make a commitment to speak to experts on this weeks and weeks and weeks ago, and we've thrilled to have an agreement with Johns Hopkins to bring you their best and brightest across all of their facilities, including the Bloomberg School of Public Health, of course, with the philanthropy there of our founder, Michael Bloomberg, founder of Bloomberg LP, and of course his television and radio operation as well. But there's much more at the Johns Hopkins University, and that includes a world-class nursing program. Jason Farley is a doctor at the nursing program. He is expert on the people in the trenches, and we spoke today about the dynamics of this nation and nursing. Here is Professor Farley.
So we know that when we're looking at how many people become critically ill, we're still looking at approximately 20% of people hospitalized needing some form of acute care. And of that group, approximately half will need some form of mechanical ventilation. Now, those needing mechanical ventilation tend to skew toward our older population, and we're still seeing that data in the United States consistent with what we've seen around the world.
Does our response team in the U.S. and in other parts of the world have enough equipment, have enough personal protection to deal with the virus in the coming weeks and months?
So the administration has finally started to offer support to the states in trying to get more PPE. There have been Herculean efforts by various governors across the United States to bring in more N95 masks, to bring in more gowns and gloves, to bring in face shields for our frontline healthcare workers. That has been different across states, and as you've seen reporting, different governors across the United States have had to basically barter, beg, and steal, for lack of a better word, personal protective equipment from various agencies, including going overseas to obtain, masks from China and their support, masks from other countries. It's also, in my home state of Maryland, the governor has launched a N95 reprocessing center, one of the largest in the country, to facilitate the reuse and cleaning of N95 masks, which is something that's unheard of. We would never typically reuse those types of masks. So we're being very resilient in our efforts to try to make sure we have enough PPE.
Dr. Farley, you are expert in the epidemiology of infectious diseases, and your Johns Hopkins has flat out done the best job of a regional, a city, almost a nationwide epidemiology and study of these statistics. The statistics, the slopes, the second derivatives for some of these regions, California, Florida, they're really not very good. New Jersey, it's not happening. Tell us about the diffusement of a virus from hot spots, which get all the media attention, out into the greater public. What is the experience you have of infectious disease from hot spots out to broader geographies?
Sure. So when we talk about hotspots, it's important for everyone to understand that's where we have ongoing, replication of the virus and transmission of the virus. When we know what the infectivity potential of the virus is, and that's what we call the R0. In this case, it's between 2 and 3. And so that means for every person that you infect, a person with COVID infects, they're going to infect approximately 2 to 2.5 to 3 people with the virus. And so hotspots allow that propagation or that transmissibility to occur in an ongoing basis. Now, the trickle effect, bleeding out into other locales and locations. It's a perfect example in the United States right now is Rhode Island. It's been getting cases coming in from New York State as well as in from Connecticut, and it was not deemed a hot spot, but because of migration, because of contact, because of people's movement, it has now started to see bleed over.
Jason Farley, the Johns Hopkins University, thrilled to have him on today with their School of Nursing as well. Paul, I think the thing that I noticed, and Henrietta Trez had the statistic of the morning on testing, which permeates all of the media study today of what we're living through, and it's under 3% of America. Yeah. I had no idea it was that low.
I had no idea it was that low either, but it goes to, testing is probably one of the key issues. We hear that from Andrew Cuomo, the governor of New York, talking about not only is it testing to get a sense of where the virus is and where it's flaring up and where are the hot spots, but it's also about this. It's going to be the backbone of the whole getting back to work, the reopening of the economy. It's going to be so important to have a robust and vibrant testing capability to really be able to do that safely. So it seems like that's probably, maybe even before a vaccine, that's probably job one from a national perspective.
Well, I actually tried to read this. Scientific American did a great job, Paul, of actually tearing apart, like when you say you're going to get a test, what does that actually mean? Yeah. It's like wicked complex. It's not routine.
No, and you wish you could get to that spot where it would be that, I think it was Abbott Labs was talking about a 5 or 15 minute test, just real quick, but we're not there yet, certainly not in any scale. So the current testing, you're right, it takes a while, and it takes a while to get results, and it's not an easy process.
Well, there we are. Right now, we're going to continue forward, folks, and what's so important here is to get the market open with futures elevated. But against that, yields come in off that difficult claims report. Just across 2s, 10s, and the 30-year, lower yields. Stay with us. This is Bloomberg.
Why do hedge funds and other alternative managers rely on Pershing for a highly personalized experience? Mark Alderati, a managing director at BNY Mellon's Pershing and head of Prime Services, explains.
In today's fast-paced environment, where the only constants are change and volatility, you need a prime broker who's both steady and agile, focused on supporting your needs so that you can focus on growing your business and producing results. Exceptional client service and advocating for our clients is at the core of what we do. Our award-winning high-touch team is just one of the benefits of working with BNY Mellon. We help alternative investment managers create great experiences for their clients. Whether it's customized financing, securities lending solutions, platform access, or outsourced trading, BNY Mellon's Pershing is a prime broker who's committed to this business and dedicated to meeting your evolving demands.
To learn more about the unique and industry-leading solutions for hedge funds and other alternative managers, visit Pershing.com. Pershing, LLC. Member FINRA, NYSE, SIPC.
Message and data rates may apply. T&C and privacy terms can be found at babbel.com/terms. Please don't text and drive.
Have you wanted to speak a new language, but you thought it'd be too hard or take too much time? Then try Babbel for free by texting EXPLORE to 64,000. In just 15 minutes a day, you'll be on your way to speaking a new language in just a few weeks. And right now, you can try Babbel for free. Babbel starts out teaching you words and phrases by matching them with pictures. You won't believe how easy the interactive program is. Soon the sentences get a little bigger, and before you know it, you're having simulated conversations voiced by native speakers. And because Babbel is crafted by language experts and uses the spaced repetition method, in just 10 to 15 minutes a day, you'll be speaking the language of your choice with real confidence. With Babbel, you can speak a language. Just text EXPLORE to 64,000 and start your first lesson in the language of your choice for free. Download the Babbel app or text EXPLORE to 64,000 and try it for free. Text EXPLORE to 64,000.
This is a Bloomberg.
Okay, people, I've got the daily checklist. Who today has eaten dinner for breakfast? Tick. Started a chore you'll never finish? Tick. Done a conference call in your pajamas? Tick. Here's another for your list. BritBox. Streaming the BBC, ITV, Channel 5, and now Channel 4. All in one place and ad-free. So add BritBox to your list and get a 30-day free trial of the biggest box of British box sets. Search BritBox free trial. Tick. Biggest compared to other SVOD providers. Auto-renews at $5.99 a month unless cancelled. T's and C's apply.
Where will 2020 take you? Somewhere where people care. About each other. About our planet. About creating a better world for everyone. And becoming the best versions of yourselves. Join a community of like-minded individuals at the University of Winchester. Make sure to accept your offer by the UCAS deadline and visit our website to find out more. See the bigger picture. Be the difference. Go to winchester.ac.uk.
This is a message from the government. Coronavirus is a national emergency, life-threatening for people of all ages everywhere in the UK. To help save lives, you must stay home. Only go outside for food, health reasons, daily exercise, or to work, but only if you cannot work from home. Stay home. Anyone can get it, and anyone can spread it. Stay home to help protect the NHS and frontline staff working to save lives. Coronavirus. Stay home, protect the NHS, save lives.
Broadcasting live from the Bloomberg Interactive Brokers Studio in New York. Bloomberg 1130 to Washington, D.C. Bloomberg 99.1 to Boston. Bloomberg 106.1 to San Francisco. Bloomberg 960 to the country. Sirius XM Channel 119 and around the globe. The Bloomberg Business app and BloombergRadio.com. This is Bloomberg Surveillance.
And good morning, I'm Karen Moscow along with Tom Keene and Paul Sweeney. And right now the S&P 500 is higher at the open. It's up 0.6% or 16 points at 27.99. The Dow Jones Industrial Average up 0.1% or 26 points at 23,536. And the Nasdaq's up 1% or 79 points at 84.71. 10-year Treasury up 7/32. The yield 0.60%. The yield on the 2-year 0.19%. NYMEX crude oil up 2.3% or 46 cents at $20.33 a barrel. And COMEX gold is up 0.25% or $4.10 at $17.4450 an ounce. The euro 1.0880 against the dollar. The yen is at 107.58. Tom and Paul.
Karen, thanks so much. And off of Karen's world-class data check, the VIX 40.55 really belies a narrow trading range we're in. Dow 23,528. To sum up this American economy, Paul, I think it would be wonderful to have an Ian Shepherdson with Pantheon Economics. His stream out on LinkedIn is best in class, really informative, quick charts of the story of the American economy. Ian, which chart recently has been the chart that's put you back? Which is the one among all your Pantheon Economics team where you go, oh, wow?
Oh, that's a no contest. That's the U.S. weekly jobless claims, the number that came out this morning. I've never had to redraw a U.S. economic chart with the numbers on a log scale just to make it kind of fit in. But that's what we've had to do with 22 million excess job losses compared to the previous trend. just over the last 5 weeks. So
Ian, I don't want to interrupt, but I love what you're saying here. Let's go logarithmic, which means the acceleration in these claims has been extraordinary. What does the glide path look better after this pandemic when we get to a better labor economy?
Well, the good news is, I mean, all things are relative, but the good news is I think that we've peaked. We've had a couple of weeks now with claims coming down, and some of the states' daily data are coming down. Google searches for filing unemployment are coming down. So I think looking forward, I'm expecting next week's number to be down at something like maybe 3.5 million, after this week was 5.25 million, and the week before was 6.6. So heading in the right direction. Now remember, before the virus caused that massive wave of layoffs, we were trending at about 215,000 a week. So we're still, more than 20 times that level. I don't see us getting back to that level anytime soon, because even as the initial wave of layoffs subsides, what we're seeing now, I think, is the damage beginning to ripple up supply chains and through business services. So getting away from the frontline consumer-facing businesses, but starting to hit all the firms that supply and provide for those firms. So unfortunately, I think that's going to last a long time, and I don't see 220,000 claims in our foreseeable future.
So, Ian, if you were to think 12 months ahead, for example, where do you think the unemployment rate might shake out? I mean, the days of where we were pre-crisis, I'm assuming we should not expect that on the other side of this. Where do you think it might shake out? Will there be some permanent changes to the labor market?
Well, permanent's a long time, but certainly semi-permanent seems a reasonable bet, because the damage is quite deep, the dislocation is quite deep, and even all the support from the Fed and the federal government, of which I think there'll be more, it can't completely offset the damage. So I think unemployment's going to shoot up towards 20% over the next couple of months, but I think it will come down quite sharp, because I do expect a full reopening over the summer. I'm hoping that a year from now, and please don't hold me to this, but I'm hoping we'll see an unemployment rate in the 6 to 8% range. Yeah. Now, just by way of reference, the peak after the crash in 2008 was 10.0%. So below that, but certainly nowhere near the 3.5% that we were sitting at quite comfortably before the virus.
What's your wage rigidities here? I mean, it's a great study here of economic slowdown, and wages theoretically don't go down. Well, they're gonna. It's a new modern labor economy and all that. What's the wage dynamic you see, given a formal study of the history of wage rigidity?
Yeah, well, with such a massive wave of job losses, all the textbooks will tell you that wage growth should drop to zero more or less immediately, and we should see nominal wage declines. But we didn't see that after the crash of 2008. And I suspect we're not going to see it now. It's kind of difficult to tell, what is the wage rate in restaurants now? Well, it's a bit like asking what's the price of a restaurant meal. There are no restaurant meals, so there are no jobs, so the wage rate is either zero or infinite, depending how you want to look at it. And now that will change as the restaurant business reopens, but my guess is that restaurants will have half the tables that they used to have in order to have social distancing. So they're going to need a lot fewer staff, and there'll be a lot of people wanting those jobs. So I do think that in those consumer-facing sectors that have been hit the hardest, we're probably going to see nominal declines in wages, which we didn't see in 2008, 2009. In the rest of the economy, I don't think we'll see that. I think we'll see slow growth in wages. It have been picking up. I think it will slow down again. But I think that the biggest hit will be, in nominal terms, will be in the most directly affected bits of the economy. So low-scale, consumer-facing services, that's where the damage will be. And there are a lot of people in that sector, millions and millions of them.
Yeah, so Ian, that's kind of where I wanted to go. I mean, we know that certainly in the United States, the consumer really does drive this economy, maybe to the tune of about 70% of the U.S. economy. So, I mean, as you think about the economic impact from this virus, how do you think it's going to play out from a GDP perspective over the next, 3-4 quarters? I think most people have kind of discounted that initial hope of a V-shaped recovery.
Well, yes, a V-shape taking us back to where we were is extremely unlikely. A V-shape taking us back to where we would have been is just not in the cards at all. But I do think there'll be quite a quick rebound once the reopening begins. I just don't think it'll be enough to recover anything like the lost ground. The experience of Europe, which is just beginning to reopen now in a few countries, is that it's very tentative and very slow and very cautious, with the exception of Spain, which has reopened construction and manufacturing pretty much en masse. But so we don't know yet how that's going to play out. But what we do know is that nobody has just said, okay, everything is open immediately. Let's all go back to work. So it will take time. And because of that, the longer the places are closed, the more dislocation there is. Supply chains fall apart. Staff disappear. It's very difficult then to get back to where you would have been. So I'm expecting a very big output gap at the end of the year and probably persisting through the end of next year as well, even with more federal government support.
Ian, one final question, always fair to an economist like yourself. Why is the stock market up?
Well, the stock market took a hit. It's not back to where it was before. The S&P is still down, well, what are we now, just below 2,800. So we're 600 points off the peak. So the market it's not so much that the market is ignoring how bad the virus effect is. What the market is doing is looking at endless free money for the Fed forever. And looking at the federal government already putting in more than $2 trillion of support, and my guess, likely to put in another $2 trillion of support. And what that does is it allows you to look past the extent of the hit, which is total. I mean, the discretionary economy right now is at zero. But you can look beyond that because the federal government and the Fed together are offering support that's on a scale that's never happened before. That's why the market is where it is now. But there's also a lot of hope that the virus is going to disappear as well.
Ian, you got to go. You're driving the 2-year yield ever lower. Ian Shepherdson with Pantheon. Can't say enough about his work and, of course, really leading with economic coverage on LinkedIn. Paul, we got to do a market update, and it's really nuanced, folks. I got red and green on the screen. Fine. Excuse me. The Dow down 121 points. I got a green SPX. And I guess Amazon, what is it, Paul? Amazon's never going to go down again? Is that what we've got?
Never going to go down again. Netflix, never going to go down again. Both of those stocks hitting all-time highs, Tom. So, a couple of winners out there, and that's keeping that NASDAQ up. It's up about 0.8% right now, despite the fact that the Dow's down about 0.5%.
John Herman, MUFJ, talks about the yield curve as pancake, and I think that's really apt here. Paul, 0.19 on the 2-year lower yield.
Yep.
2-year yields come in, a 10-year yield rather, 10-year benchmark has come in with a vengeance, 0.60% on the 10-year yield. That's in a solid 3 beeps further today. And to me, the headline is the 30-year bond, 1.22%. I mean, just
that's
unbelievable.
In 4 basis points again. So, just the yields kind of coming in here. People, the 10 years up 9/32 here today. Right. So, people looking for the safety of the U.S. Treasuries. And, it's an argument we've had for a long time. Where else are you going to go? I mean, so it's just kind of been the safety of the U.S. Treasury market, despite the fact that they're in there aggressively printing money.
And we heard that from Howard Ward at Gabelli yesterday. He was quite something, folks, with his optimism on equities, primarily because, not only because of, but he did put a real weight into, okay, where else are you going to go as well? Brazilian real breaks out, new strength there, 5.25%. Mexican peso back up above 24. That's a weaker Mexican peso. And Turkish lira has its own idiosyncrasies. It is really pretty difficult. It's challenged, I should say. It's 6.94 Turkish lira per dollar. Let's do this. Let's catch up on the news in New York City. Here's Michael Barr.
Tom, Paul, thank you very much. Citing the coronavirus, President Trump is threatening unprecedented action, adjourning both houses of Congress to entice the Senate to approve more of his nominees.
The Senate should either fulfill its duty and vote on my nominees, or it should formally adjourn so that I can make recess appointments.
California Democratic Senator Kamala Harris says she thinks the president is just trying to create a distraction.
To deflect from the fact that he has failed to be a leader during a pandemic, a public health crisis, and economic crisis facing our country. I frankly think we got to stop waiting for him to act like a president.
President Trump is expected to outline his potential plans for reopening the country today. However, several big city mayors are saying the president's plan to bring back large-scale events could still be a ways off. Los Angeles Mayor Eric Garcetti says the infection and death rates are slowing, but have not yet hit their peaks. He urged anyone with symptoms, even mild cases, to get tested.
If you have symptoms, please get a test. Don't wait until somebody says go. If you're feeling those symptoms, do it today, because we don't want unused test kits at the end of each day due to folks thinking that mild symptoms are no problem.
Garcetti also says large-scale gatherings like concerts and sporting events likely won't come back to his city until 2021. The U.S. Navy released a video that says it shows Iranian naval vessels repeatedly conducting dangerous and harassing approaches toward U.S. Navy warships in the Northern Arabian Sea. The naval ships were in the area conducting exercises when it happened yesterday. Global news 24 hours a day, on air and on Quick Take by Bloomberg, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Michael Barr. This is Bloomberg. Tom, Paul?
Michael Barr, thanks so much. Paul Sweeney, of course, driving so much of our equity coverage at Bloomberg LP with his inventing of Bloomberg Intelligence and doing a lot, of course, over the years in media. Paul, have we reached streaming saturation with Peacock, the universal Comcast, rather, effort?
Yeah, Peacock is the streaming service for Comcast, NBC Universal, and, they've got a lot of content. They, like everybody else, feels like they need to have a direct-to-consumer relationship, and so this is it. It's Peacock. And so, I think we're in the process, Tom, and maybe this quarantine is going to accelerate the process, but we're in the process of consumers just figuring out what they want. And it's going to be a shakeout. And, I thought the shakeout would take 2 or 3 years. Maybe this quarantine process will accelerate it all. We'll find the winners and losers and what content really works and what it's worth. But we're seeing all-time highs for Netflix today, which just shows you kind of where the demand is.
Am I not hip, Paul, because I haven't seen Hi Bye Mama, Hospital Playlist, Hyena, or Rugal on Netflix? Am I socially... My children say I'm socially constrained.
You have a day job, but I think you're doing a pretty good job, but it's just a question of, is this going to accelerate the cord cutting across the country? That's also another big issue.
Netflix, Cadillac Records. Now there's a movie to see. This is Bloomberg.
This is a Bloomberg Pursuits look at luxury in the time of coronavirus. Vince McMahon's XFL, the upstart football league that twice promised fans a reinvented game, has landed in bankruptcy court with plans to sell off some of the $50 million in assets just weeks after suspending its comeback season. The league had broadcast agreements with Fox and ESPN and promised to embrace new technology and gambling in a novel way. It only played 5 weeks, half its regular season, before shutting down. Even virtual races carry real-world consequences for NASCAR drivers. Driver Kyle Larson was fired Tuesday from Chip Ganassi Racing after he used a racial slur, while Bubba Wallace lost a sponsor when he rage quit an e-NASCAR event in the middle of the race. At a time when there aren't press conferences and media scrums, athletes competing on open microphones from home, constantly mic'd up through cameras or gaming headsets, can give fans a glimpse into their personalities, for good or bad. I'm Andrew O'Day, Bloomberg Radio.
Vatsal Shah is Senior Project Engineer at Mott MacDonald, a global engineering consultancy with more than 16,000 employees. He earned his PhD at New Jersey Institute of Technology, and as an adjunct professor, is helping NJIT students explore emerging technologies.
My focus is renewable markets, emerging technologies, the idea of floating cities. What are we doing to develop that? What will happen to the city on the water? Well, you're going to have waves hitting it. You're going to have solar. How are you going to develop plants? How are you going to develop vegetation and farming? That sort of thought process happens at NJIT. We actually plan out what will the city look like. How do we develop that? So in 10 years, we're actually ready to take on those challenges when we have our first development in the water. NJIT also has been doing a lot of work in self-healing materials, so taking the polymers and the new material that we have in our material sciences departments and putting them into things like concrete, things like steel, reinforcing our soil.
NJIT, New Jersey Institute of Technology. Learn more at njit.edu.
This is a message from the government. Coronavirus is a national emergency, life-threatening for people of all ages everywhere in the UK. To help save lives, you must stay home. Only go outside for food, health reasons, daily exercise, or to work, but only if you cannot work from home. Stay home. Anyone can get it, and anyone can spread it. Stay home to help protect the NHS and frontline staff working to save lives. Coronavirus. Stay home, protect the NHS, save lives.
Be part of the college sports conversation on TuneIn. Hear the latest storylines around SEC football with the Paul Feinbaum Show.
I distinctly remember when you were hired, and I must say most of us thought you were out of your mind, giving up. I wouldn't call it a cush job because you were traveling across the country.
Get your college hoops fix with college basketball talk on NBC Sports.
Headed by Shabazz Napier, that also included Amita Brima, who is in and around the NBA ranks right now, and DeAndre Daniels, who was the 37th pick in the 2014 NBA draft. So my question to you is...
Or listen to the daily news from around the wide world of college football with College Football Live. I would go with Utah. I think Utah is the better team. And I know I'm talking to an Oklahoma guy, but listen, and it may be recency bias having watched Utah last week and doing that game, but I just think they're a more complete football. Discover these and more college sports podcasts right here on TuneIn.
Headlines and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and on Quick Take by Bloomberg. This is a Bloomberg Business Flash.
And I'm Karen Moscow. The S&P 500 is higher as investors take solace from a slowdown in U.S. unemployment claims, even as the total top 5 million. We check the markets every 15 minutes throughout the trading day on Bloomberg. The S&P is up 0.2% or 6 points at 2789. The Dow Jones Industrial Average down 0.6% or 132 points at 23,367. And the Nasdaq up 0.9% or 77 points at 8470. And that's a Bloomberg Business Flash. Tom and Paul.
Karen, thank you so much. Well, in the United States, we have Uber, we have Lyft for our ride sharing. In China, they have a company by the name of Didi. David Rubenstein, Carlyle co-chairman, sat down with the president of Didi and part of his latest peer-to-peer conversations. Let's take a listen.
Uber is now publicly traded, and it's losing a fair amount of money every year, $1 billion plus a year or something like that, or more. Are you thinking of going public, and are you losing money, or are you making money?
Well, we do have a specific IPO timetable, let's put it that way. And back to the Uber point, I'm sure it's temporary and they will go through it. Dara is a very diligent CEO and very experienced. For us, we think profitability is a natural result of the value you really create. And there are two things in China very different from the other market. First, the rideshare is cheaper than car ownership. So that's the huge value creation you provide to your users. And secondly, in China, we are going through a transition that people urge for better life quality, better lives.
Jean-Lou of Didi, David Rubenstein joins us now. And of course, these peer-to-peer conversations are just superb, and they're always names we know, except not now. David, I want you to sell Miss Liu to our audience. Why do we care about this interesting investor from China?
Well, it's a very interesting woman. She's educated in China. Her father's a prominent business person. He started Lenovo, which is a major computer manufacturer. She later went to Harvard, got a computer science degree, and then did what many Chinese educated in the United States do. They went to work in Wall Street. She went to work for Goldman Sachs in Hong Kong, and she became an investor. And she wanted to invest in a company called Didi, and they wouldn't take her money, Goldman Sachs' money. Eventually, she said, "Let me just join the company." She did. Now she rose up to be the president. We think in the United States that we're the center of the universe very often, but Didi is bigger than Uber. Now, Didi is not publicly traded, so we don't know completely the value, but it has more customers than Uber does, and it just has a bigger base than Uber does. We have more people there.
That scream you heard last night, David Rubenstein, was Paul Sweeney screaming at Uber or Lyft or one of them in New Jersey as well. What's the ability to bring Didi over to America?
Well, interestingly, many of the Chinese companies that are the dominant in China don't really do that well in the United States or haven't become major presences here. So like Alibaba is not a major presence here, or at least not yet. Didi actually is owned in part by Uber. Uber's an investor in it. Uber tried to be a major presence in China, and it ultimately couldn't beat Didi, so it basically invested in Didi, and Didi is really the dominant partner there, and Uber will not really compete in China with them. Whether Didi will come to the United States, I think right now probably they've got their hands full with China.
So, David, what did Ms. Liu suggest to you was, the key challenge for continuing the growth of Didi?
Well, of course, this was done before the coronavirus. The interview was done a little while ago. Now everybody has the challenge that nobody's traveling, though China is coming back online, and therefore China is more using these kind of things than they are in the United States right now, because people are going back to work. So it's not like the United States where nobody's traveling. Didi basically is a company like Alibaba, which has become a major presence in China. Everybody knows it. Everybody likes it. And interestingly, what she does very often is she drives the car herself. She wants to see what her customers are thinking, so she drives the car. And very often, she gets comments from people saying, "You're not a very good driver. I'm going to report you to the company," or something like that. Or sometimes people say she's very good.
So what's the competitive landscape in China for the ride-sharing business? Here in the States, we've got Uber, we've got Lyft, kind of duking it out.
When it was started, when Didi was started in China, there were roughly 30 of these companies, and in the end, they got down to just a few. And Didi is the dominant one there, just as Uber with Lyft are the two dominant ones here. But Didi has a much bigger presence than Uber really has in the United States. It's much more dominant and many more customers. And I just think it's likely to expand into other areas. And it's extremely well respected for their service and their ability to kind of take care of customers' various needs.
David Rubenstein, thank you so much. Greatly appreciated. The Carlyle co-chairman and, of course, interviewer extraordinaire. I can't say enough, folks, about the David Rubenstein Show peer-to-peer conversation, 7 p.m. Friday in New York, with a gentlewoman from Didi of China as well. Paul, I don't know about you, but, executives we remember from when no one knew who they were. And this Australian mathematician showed up one day at Morgan Stanley, and a lot of us said, "Who is this guy?" I've busted Mr. Gorman's chops about this, but who is this guy?
That's right. He's not a trader. He's not a big swaggering investment banker. He's not a John Mack from earlier days and things like that.
I've had the privilege of having Mr. Mack kid me about Mr. Gorman of how different they are. But remember when he showed up and he said, "We're going to do wealth management." Right. Everybody from Brad Hintz on down said, "Really?"
Yeah, exactly right. But boy, he has pivoted that firm, Tom, and you and I have talked about it in the past with Allison Williams and with others, to really one from paring back on the risk, paring back on the trading risk, paring back on some of the investment banking risk, and focusing, coming out of the financial crisis, on more of that stabler, fee-driven wealth management business. And he pivoted hard, and I think he pivoted first. And I think it's been quite a success for Morgan Stanley.
It's interesting. You wonder where the stock will be 10 years from now. You're going to get an interesting look at that, folks, here in exactly 7 minutes. Mr. Gorman joining Bloomberg Television and Bloomberg Radio worldwide. And I tell you, folks, given the write-downs we've seen from the more banky banks and given the challenges of management transition at Goldman Sachs, this will be a most interesting time to listen to our Eric Schatzker in conversation with Mr. Gorman. I'm going to migrate Paul on my Bloomberg terminal here. I can do that, folks, because I have a fabulous terminal on my cell phone. It's one of the reasons to get the terminal, to be blunt, to see the Dow down negative 158 points, the VIX 41.40. Huge churn to the market, but I really want to emphasize up 0.9%. I never say that. But there it is.
Yep.
Is the Amazon 100. I mean, Paul, when I guess it's a bet on digital. That's really what's going on.
I think it's a bet that consumer behavior is just migrating more and more and more, and will be on an accelerated pace to the Amazons of the world, to e-commerce. And you see more and more boxes outside more and more doors today.
Yeah, and yields coming in as well. You got a snapshot there. The 2-year yield 0.19 and the 10-year yield in 3 basis points, 0.61%. Paul Sweeney and I say thank you to our technical team. It's been extraordinary what they've done in the recent weeks. I believe there's another day in the week tomorrow. We will be here. Stay with us. James Gorman coming up next. This is Bloomberg.
Not completing high school.
Hit the court anytime with these great NBA podcasts on TuneIn. The Low Post
So what struck you about this potential head-to-head matchup? What did we learn now that Zion is involved and LeBron and Zion go at each other for the first time?
You know, I still think both teams have to figure out kind of who are their guys when they get into a fourth quarter. I think you saw that with both of them. There were some kind of odd moments.
The Ringer NBA Show.
Who ended up winning the thing. But I did watch for a little bit when it was DeAndre Ayton and Zach LaVine playing against each other. And then as the days went on, Devin Booker was involved. Tell me you've seen the clip of Devin Booker when I can't remember who his opponent was.
Or the Hammer Show.
At the end, it's because I worked in the NBA in a front office, and when I was 14 years old, my family moved back from Sudan to America. I jumped high school here in New York
Find these and more NBA podcasts right here on TuneIn. Get ready for the 2020 NFL Draft with TuneIn.
Do your homework on this year's top prospects, rising stars, and late-round sleepers with football podcasts like Move the Sticks.
Is my pick because I know he is an athletic freak, a guy that is capable of doing it all. He can blitz, he can run, he can cover.
And when the draft gets underway on April 23rd, follow every round and every pick for free.
In the 2018 NFL. It's always football season on TuneIn.
For weeks, we've heard about panicked shoppers causing a run on toilet paper by irrationally hoarding it. But that ignores one key factor.
That the toilet paper you use when you leave the home is not the same toilet paper you use at home.
How incomplete information, whether about supply chains or infection rates, leads to incomplete narratives. Don't miss this week's On the Media from WNYC. Listen to the On the Media podcast from WNYC Studios on TuneIn today.
Be part of the college sports conversation on TuneIn. Hear the latest storylines around SEC football with the Paul Feinbaum Show.
I distinctly remember when you were hired, and I must say most of us thought you were out of your mind, giving up. I wouldn't call it a cush job because you were traveling across the country.
Get your college hoops fix with college basketball talk on NBC Sports.
Headed by Shabazz Napier. That also included Amita Brima, who is in and around the NBA ranks right now, and DeAndre Daniels, who was the 37th pick in the 2014 NBA draft. So my question to you is...
Or listen to the daily news from around the wide world of college football with College Football Live.
I would go with Utah. I think Utah is the better team. And I know I'm talking to an Oklahoma guy, but listen, and it may be recency bias having watched Utah last week and doing that game, but I just think they're a more complete football.
Discover these and more college sports podcasts right here on TuneIn.
You love TuneIn for live breaking news from CNN, MSNBC, Fox, CNBC, and more. But when you can't catch your favorite show as it airs, it might just be a click away as a podcast. Search your favorite news station to explore all the on-demand news shows on TuneIn.
Capital of the world, 24 hours a day at Bloomberg.com, on the Bloomberg Business app, and on Quick Take by Bloomberg. This is Bloomberg Radio. This is Bloomberg Markets with Lisa Abramowitz and Paul Sweeney.
Is there any bank right now in the U.S. that you think is a buy?
Do you think Chairman Powell has lost the market?
Jeff Bezos is no dope. What's the big ka-ching?
The big question, I think, for investors is free cash flow.
Breaking market news and insight from Bloomberg experts.
The U.S. tariffs actually hurt both China and the U.S.
Large strategics are looking to either buy or invest in innovation.
Soybeans and corn have been basically at or below the cost of production for about 4 or 5 years.
And what we see more bonds, more yield.
This is Bloomberg Markets with Lisa Abramowitz and Paul Sweeney on Bloomberg Radio.
Good Thursday morning from New York City and points beyond to our worldwide audience. Coming up in just moments, Morgan Stanley CEO James Gorman. He's to discuss the company's earnings as well as the outlook with Bloomberg's Eric Shaxter. We will have that for you in just moments. So, Lisa, we started off today, which is of jobless claims numbers, which were just staggering and effectively over the course of the month, over the last several weeks, wiped out the entire job creation over the last decade.
Yeah, shocking. And I guess that the conundrum here is, do people filing for unemployment now make it easier for them to come back online afterwards? I mean, I think that the key point that you hit on there was an entire decade of job gains lost in 4 weeks. Can we see those job gains built up in a faster period of time, given the fact that perhaps people will be better capitalized and perhaps businesses will be in a better position just to come back online? Big question right now.
Yeah, it really is. And I think it kind of comes back to, we've seen the Federal Reserve, Lisa, as we've talked about before, has done an admirable job, to say the least, in terms of pulling out some of the tools in its toolbox to, enhance liquidity, ensure liquidity in the financial markets and the money markets. And in terms of fiscal stimulus, that's really where we really need to see continued action. We've had a couple of good bills, some meaningful bills, but quite frankly, the money that was set aside for small and mid-sized enterprises, will effectively run out today. So it's really putting pressure on Congress once again to come to the party with another stimulus package. And again, getting cash into consumers, getting cash to small and mid-sized businesses quickly.
Yeah, honestly, Paul, Tom Keene was harping on it all morning, and he was right to do so. He was saying, we're getting dismal numbers. By his estimates, and confirmed by Michelle Meyer of Bank of America, 14% of the American workforce lost their job in the past 4 weeks. 22 million Americans. Stocks are up. At least if you look at the NASDAQ, right? I mean, the S&P has turned lower on the day, but it sort of raises a question, how can stocks rally at a time when we just see an absolute demolition of the jobs picture? And a lot of it's on this bet that you're talking about, which is that we're going to get stimulus and we're going to get ongoing stimulus, and it's all priced in. Now, what we're seeing from the banks is we don't know what's priced in as we get sort of provisions here with $25 billion set aside at 4 of the biggest banks in the United States for souring loans. Just a real question here. How do you even map out what's to come?
Yeah, exactly right. And even Morgan Stanley on their conference call today said, listen, we had a good first quarter from a trading perspective, but that will not last. In fact, they're already seeing their trading off here in the second quarter. So even they're suggesting, much like we heard from the other big banks over the past couple of days, just the unknown. They really don't have a sense of how deep this will be, how prolonged it will be, and therefore they really have little to no confidence in their future business.
Yeah, and James Gorman, the chief executive officer of Morgan Stanley, with a front row seat to the uncertainty and a front row seat to the virus, having recovered from it himself, staying at home. Right now, we are going to hear from James Gorman, Morgan Stanley's chief executive officer, in a conversation with Bloomberg Television and Bloomberg Radio. Let's listen in.
Welcome, folks, to our Bloomberg Television and radio audiences worldwide from New York City. I'm Eric Schatzker. Morgan Stanley reported earnings this morning, and it was mostly a strong performance given the extraordinary period we've lived through, the kind of volatility in March. With us for an interview this morning is none other than the firm's chairman and CEO, James Gorman. James, thank you for joining us.
Eric, thank you for having us.
I have to start here, James. You had the coronavirus. You spent a month sick at home running an 80,000 person firm. How are you doing?
I'm doing great. Thank you. I'm completely recovered. And, to be perfectly clear, I had the virus, but I was one of the lucky ones. I was not hospitalized. My lungs did not get infected, which is, was a real blessing. And, while it's unpleasant, it's certainly, in those conditions, it's manageable. My heart just goes out to the folks who are not that fortunate or who had underlying health issues and the very elderly who, have really struggled and tragically passed away. I mean, it's a curse, and I just wish everybody well who gets it, and wish them stay hydrated, stay rested, and wish them the best.
I second those wishes. James, Ray Dalio told me yesterday that this is much worse than the 2008 financial crisis. What kinds of base case assumptions are you making at this point for the recession and the recovery?
I'm trying to think. I'm not sure I agree with that. I mean, the economic impact, the GDP decline is obviously much worse, but it's so specific, and it's built around the virus. What kind of world will we have when we have immunity from it, when we have, the right testing? There are so many unknowns now, whereas back in 2008, it was a fundamental collapse of the whole financial system, and had it not been, the system not been rescued, then who knows what long-term damage, multi-decade, might have been to the economy. So, but listen, these were both truly tragic situations. I mean, from our perspective in running a company, there's, a few things you got to focus on. Number one, we've got millions of clients trading trillions of dollars all over the world. Our plant has to work. We have to be able to facilitate clients doing that so they can manage their businesses. They have to have the ability to manage their own liquidity and funding and capital needs, and we play a critical role in that. In the number one equities player in the world, one of the largest wealth managers in the world, one of the largest capital markets businesses, etc. So number one, the plant has to work, and thank God, Eric, with 90% of our employees at home, we've had almost no issues from our plant. And that's just a remarkable testament to the tech and ops teams at this place. The second thing is you do your bit. I mean, we voluntarily cut back on our buyback to zero. We thought it was best to preserve our capital to support clients in need. We're obviously doing everything through our communities that organizations like ours that are large and have resources should be doing. Third thing is to make sure that our teams are properly coordinated given the remote isolation everybody's going through. And we spend an enormous amount of time communicating with them, setting up plans. What would it be like to bring people back to work? Starting to think about what the future might look like.
So it's clearly not as bad, or at least you don't think it's going to be as bad for Morgan Stanley, and perhaps not as bad for the banking industry as the 2008 financial crisis was. What about the broader economy? 5 million people filed for first-time unemployment benefits last week. It's 22 million, in excess of 22 million since this began. How do you fathom or even model the kinds of dislocation unemployment on that scale is going to produce, James?
Yeah, what's the shock to the global economic system is something we haven't seen since the Great Depression. And as you point out, is far more dramatic than what occurred during the financial crisis. And in addition, we have this massive health crisis, which is working its way around the world with at times devastating consequences. You can't model this. I mean, what you've got to do is preserve your capital, make sure you're well positioned to deal with the risks, understand the risks you're taking on as a business, and manage your way through that in a way where the whole team, as I said, is working together. We have, daily operating committee calls. We have risk committee calls constantly. The whole team is organized around how do we ensure that, A, we're doing our job for our clients, and B, that Morgan Stanley remains stable during a period of incredible dislocation.
What will you need to see, James, before it feels like the right time to go from a conservative posture to something with a little more risk appetite?
Well, we're taking risk, all day long. We're supporting our clients, and by doing that, we're taking risks. We have a $900 billion balance sheet, so it's not like we're not in the risk business. We just we're just conservative. We were conservative coming into this with our profile, and we're conservative in managing through it. What's going to change that? Firstly, the health crisis has to get resolved. You have to see, the flattening of the curve and the shape of the curve change in several countries around the world. We've started to see that in Taiwan, in Korea, in Singapore, in certain places, Germany, it looks like. But we need to see that, particularly in the U.S., I think, and, just look at what's going on in New York City. So, number one, the health crisis has to be dealt with. And then, number two, you have to see more of these poor folks who've been laid off all over the world. I mean, look at the numbers, as you just referenced, Eric, in the U.S. this morning. Another 5.3 million, I think, for unemployment claims. These folks have to get back to work. All the thousands of small businesses just in cities like these. When you start to see that, then you'll start to see confidence creeping back in, but it'll be slow. This is not going to be a rapid turnaround.
It took, as you know, almost 6 months for the market to hit bottom after the Lehman weekend. We're only 6 weeks into this crisis, and already we've seen a powerful rebound. James, what are the chances you think the market has already hit the bottom of this crisis?
Oh, boy. That's a tough question. I mean, my gut is that the equities markets, absent a devastating shift in the health situation, the equities markets have bottomed. That doesn't mean we won't retest those bottoms. We could easily do that. But the volatility you're seeing in the markets right now, 2 to 4% a day. It was 6 to 10% a day a month ago. Fixed income markets also a lot aided by the help of the central banks have stabilized. Much more liquidity in the system. So my gut is that the markets were at their highest point of instability 3 or 4 weeks ago. That could be retested. I think it's unlikely from a liquidity perspective to be retested. From an equity value, it might be. But we live in an extremely uncertain world for the next few months. But every day that there's progress in a country, every day that you're seeing declining rates of infection and obviously the tragic deaths that flow from that is a very positive day to getting the world back on its feet.
Hedges helped your firm offset some of its credit losses in the first quarter. How hedged is Morgan Stanley at this point, and what kinds of protection have you put on?
Well, I'm not going to go into details of how we've hedged the institution, but needless to say, it would be imprudent not to have done that. And yes, it mitigated our losses by approximately 1/3, I believe, across our trading businesses. This is something that if you're in this business when, frankly, nobody can tell me what the market will do tomorrow, so anybody who thinks they know what it's going to do over the next several months is dreaming. So you have to be conservative and mitigate your downside risk.
Even though those hedges are much more expensive to put on now than they were, say, in January or February.
Sure, it's why you buy insurance for your house, particularly if you live in a flood zone. Absolutely. That's a no-brainer.
Morgan Stanley's institutional clients drew down billions of dollars in revolving credit lines over the course of the first quarter, and as we've learned today, there's billions more they can draw. What were those conversations like, James? I'd love to know, particularly with those clients who were not drawing down because they needed the money, because they were either thinking themselves prudent, perhaps fearful, or even panicking.
Well, listen, I had those conversations. I had some of those, and the CEOs I talked to, they've got to do what's in their best interests. We have these revolvers. They're entitled to draw them down. Obviously, not all of them wanted to do that, but they've got to operate what ultimately is in their best interest, and that's what a number of institutions did. And do I begrudge that? Not at all. That's what we're in the business of doing, is supporting our clients.
As you've mentioned, some 90% of Morgan Stanley's 80,000 employees are working from home. It's a staggering figure, of course, one we've seen repeated across the industry and many industries for that matter. It's amazing, though, that it has come, at least by your admission, with no major loss of capability. What I'd like to know is, how does that change the way you think about the way this firm operates in the future?
We've just started, and I guess it's a good sign, right, that we're starting to talk about the future. The last couple of operating committee calls have been focused in part on what the future might look like, and we're starting to sort of, play out tabletop what that could be. Clearly, we've figured out how to operate with much less real estate. That, number one, right off the bat. Now, do I think everybody's going to be working from home? No. I think the mentoring, the connection, the team bonding, the brainstorming, the creativity that comes from being in groups of individuals like-minded and not like-minded. That's how great organizations thrive. But can I see a future where part of every week, certainly part of every month for a lot of our employees will be at home? Absolutely. By the way, it saves on all the commuting time. It gives them more capacity in that regard. People have been functioning extremely well. So it's a grand test. Somebody said to me the other day, if you'd asked us in January to tell all our employees as a test run, 90% of them to go and work from home, and let's see what happens, nobody would have taken that risk, right? You'd think the whole place could stop. And yet we were forced to take this test, and guess what? We came out the other side of it. So that tells you an enormous amount about where people need to be physically, not just all the time, but some of the time. I'm still, though, a huge fan of mentoring and bonding and having teams together and the creative surges that come from having people working together.
Is it a natural conclusion that a firm like Morgan Stanley and perhaps other firms in your industry are not going to need as much of a footprint in places like Manhattan, London, Hong Kong, and that something about the character of this industry, Wall Street, let's call it, is going to change permanently as a result?
No, I don't think that. I mean, I'm sorry, I'll take the two parts of the questions. I think, yes, we will have less footprint. I think that's highly likely. We've proven we can operate with effectively no footprint. So now, on the other hand, as I said, I want most people in the office most of the time. So no, I don't think the character of the industry will change as a result of that. I think what has been informally done with the number of employees in the last few years migrating to a day at home will become, over time, much more of a formal structure that we probably evolve to.
James, on behalf of Bloomberg Television viewers and Bloomberg Radio listeners worldwide, I want to thank you very much. James Gorman, the CEO of Morgan Stanley.
That was Eric Schatzker sitting down and speaking with James Patrick Gorman. He is the chairman and CEO of Morgan Stanley. Morgan Stanley reported results this morning, came in a little bit better than expected, but the company warning that it's going to become much more difficult in the quarters to come. And I think, Lisa, that's kind of what we heard from Mr. Gorman today, some cautious optimism that they're trying to look towards the other side of this and kind of seeing how they can still maintain their leadership position, which they enjoyed going into this crisis.
Yeah, and really with James Gorman reiterating some of the more bullish calls we've heard from the research team, saying that unless we get some serious deterioration in the health news of the progression of the virus, that equities probably have bottomed here. We could retest the lows. He was definitely cautious about this, but saying, we are starting to see some visibility as far as the other side, as long as we don't have visibility, as long as we don't know our unknowns, as long as our virus counts don't pick up substantially. But it really raises a question for the bank going forward. Is it going to move more into lending at a time when that will eventually take precedence? Will it continue to lean on its wealth management and its trading arms, which have been highly beneficial, particularly the trading revenues being a star performer in a quarter pocked with loans and credit losses? Sri Natarajan covers all things financials for us here at Bloomberg News and joins us now. Sri, I want to talk a little bit about Morgan Stanley's earnings and sort of how it highlights the trend we're seeing across Wall Street. Trading revenues beating expectations across the board. Definitely plugging a bit of a hole when it comes to loan loss provisions and other areas of the bank. How long can that continue?
Morning, Lisa. Absolutely. Like the trading revenue part, not just at Morgan Stanley, pretty much every other bank, everyone blew past estimates. It was a phenomenal quarter for all of the Wall Street trading desks, and it was extremely critical that they had a blowout quarter because of the big holes opening up in other parts of the business. Every bank has been taking huge loan loss provision, credit loss provision, mark-to-market losses, and it really was the trading desk that saves the bacon for them. But then the important part is what happens going forward. And to your question, do they have the stamina to continue like this? Well, John Truzan, Morgan Stanley CFO, offered us the first clue today that might not be the case. While volumes are still elevated from what we saw in January and February, they're already down about 20 to 30% from the craziness of March, is what he's saying. So you could have a situation where the second quarter, the protracted lockdown continues. It brings with it all the negatives that you saw in the first quarter without the trading boon accompanying it. And that's a worrying sign for the banks.
Sri, what was some of your takeaways from Eric Schatzker's discussion with Mr. Gorman just now?
Look, I always find Gorman to be a fascinating interview. He's emotional, passionate, and even before the TV interview when he was on the call with analysts and investors, you could sense that, he was emotional. Obviously, Gorman's just recovered from the coronavirus, not a serious case, but still one of the most senior executives on Wall Street to have tested positive for it. He worked through it, and he didn't have to be hospitalized. But again, he made some critical points. One of the things he said was this is a shock to the global economic system that we haven't seen since the Great Depression, not since the financial crisis of 2008, since the Great Depression. You cannot model this. He was clear about that early on. He said, we're not going to be in a position to meet our targets any CEO who says that they are going to be able to meet their short-term targets is living on a different planet. Is that a subtle dig at Goldman Sachs, who came out yesterday and said, we're not changing our medium-term targets? Maybe, maybe not. I guess the distinction there is between short-term and medium-term. But it does highlight, and really what Gorman was saying in the interview with Eric also highlighted that we are entering a period of high uncertainty. It's completely unclear to everyone from the layperson to the folks running these big banks as to how this will pan out. And that is why you're hearing everyone taking on a conservative posture as we move ahead.
All right. So since you brought it up, let's talk about the rivalry between Morgan Stanley and Goldman Sachs. Who won this quarter?
Yeah, I think, to be honest, both of them in the same boat. Again, what holds Goldman and Morgan Stanley apart from the rest of the industry? And I think that's the comparison we should be making, Goldman and Morgan Stanley versus their other big banks, the JPM, Citi, BofA, Wells, is they don't have that same hefty commercial loan book, the consumer loan exposure like those banks. So where you were seeing on the one hand, $8 billion loan loss provision, $4 billion, $5 billion, these guys had a much smaller figure, a much more manageable figure, because they don't have that kind of exposure. So they were insulated from it. Their trading desks, which are really top of the line, the best on the street, really outperformed and really did well. The real question is, if that slows down and you don't have any of the booms from the other side, it's going to be a troubling period for the banks. And I don't think it's going to be one where you will necessarily see a few separating themselves from the others. I think they all ride the same boat going forward.
So, Sri, coming into this crisis, I think the accepted wisdom was that the banks are in a much better place financially and from a balance sheet perspective. Okay, I get that, but this is a totally different type of animal we're dealing with in terms of the decline in the global economy. Is that still the feeling that you heard on these conference calls from the CEOs, that they feel confident in their balance sheets?
Pretty much. The caveat to that is you could probably go back to early 2008, late 2007, and I don't think you would have found a CEO on Wall Street who would have said, we're really concerned about the state of our balance sheet. They were confident back then also. But the reality is, and when you talk to analysts and the folks doing the numbers, as things stand, banks do seem to be in a much better position. They are really well capitalized compared to 10 years ago, and the feeling is the risk might have shifted elsewhere. Not that the risks have disappeared, but they might have shifted outside the banking system. The other thing to keep in mind is what sets this period of heightened volatility and this crisis apart from, say, the 2008 crisis was, it took a good amount of time for the government to act. It took a good amount of time for the Fed to intervene. It's been very different this time around. The Fed, the government, everyone has jumped in right from the get-go. And that has also given confidence to folks that this isn't a systemic issue from a point of view of what will happen to the banks. But that doesn't take away from the fact that there is still great economic uncertainty. There is a real crisis brewing out there. And ultimately, the health of the bank is intricately tied to the health of the broader economy. So if that doesn't recover, you will have to worry about banks at some point.
Sridhar Natarajan, thank you so much for being with us. Bloomberg finance reporter joining us on Morgan Stanley earnings. Morgan Stanley shares down 2.6%. We're seeing the shares of all the banks getting beaten up after earnings, even though they were in some ways setting aside money in order to support their balance sheets going forward. Some view that as somewhat prudent. Coming up, we're going to talk more about those jobs losses and what to expect from the U.S. economy, how to pair that with your market call. This is Bloomberg Markets.
This is a Bloomberg Money Minute. Stocks have erased early gains and are now lower. Energy stocks, the major decliners. ConocoPhillips will voluntarily slash oil production and has suspended share buybacks. The pandemic has cut oil demands globally. The number of Americans applying for unemployment benefits fell last week to a still massive 5.25 million. That caps 4 weeks of coronavirus-related shutdowns that erase more than 10 years of job creation. A new IRS website allows Americans awaiting their stimulus payments to find out when they're going to arrive. The webpage lets recipients log in to see when their payment will be sent and whether they will receive it by direct deposit or a mailed check. And Wells Fargo and Citigroup said they're making adjustments to ensure stimulus payments are received in full by checking account customers with negative balances. The firm's deviating from the typical practice of deducting a negative balance from incoming payments. Courtney Donahoe, Bloomberg Radio.
You took the first step and quit smoking, but even former smokers may still be at risk for lung cancer. That's why SaveByTheScan.org wants you to know about a new low-dose CT scan that can detect lung cancer early. It takes only 60 seconds and could save your life. You took the first step, now take the next. Visit SaveByTheScan.org for a simple quiz to see if you're eligible and talk to your doctor about screening. SaveByTheScan.org is brought to you by the American Lung Association's Lung Force Initiative and the Ad Council.
The Bloomberg Business of Sports podcast. How did the Yankees become this mega valuable team? Where the money is flowing inside sports around the globe.
From the marketing perspective, where are the dollars spent?
From union heads to team owners, Scott Soshnick and Michael Barr speak to the names that power this multi-billion-dollar industry.
Boston Red Sox CEO Sam Kennedy.
National Hockey League Commissioner Gary Bettman.
Bloomberg Business of Sports. Listen today on Bloomberg.com, the Bloomberg Business app, or subscribe on Apple Podcasts. Are you interested?
At Asda, we're doing all that we can to keep shelves full and prices low. So you can pick up a 7-pack of Grower's Selection bananas or 400 grams of seedless red grapes, both just £1 each. Asda. Save money, live better. Selected stores subject to availability.
This is a message from the government. Coronavirus is a national emergency. Life-threatening for people of all ages everywhere in the UK. To help save lives, you must stay home. Only go outside for food, health reasons, daily exercise, or to work, but only if you cannot work from home. Stay home. Anyone can get it, and anyone can spread it. Stay home to help protect the NHS and frontline staff working to save lives. Coronavirus. Stay home, protect the NHS, save lives.